Andrew Bailey and Christine Lagarde say they are ready to ramp up measures to fight price pressures, but they warn of a new era of sustained high inflation. That as French CPI hits 6.5%. Activity recovery. Chinese manufacturing expands in June for the first time in 4 months as COVID curbs ease. Plus, NATO members commit to a 7-fold increase in battle-ready troops. That's its biggest upgrade since the end of the Cold War.
Now, Tom, this is what futures are looking at. We're seeing a bit of pressure with the FTSE 100 futures down some 1.6%. Of course, if you look at stocks, it's all about inflation. They worry about economic growth, so we'll see how the day progresses. And happy end of quarter to you, Tom.
And welcome back, Francine, after you sat down, of course, with the puppet masters of the global economy saying inflation will remain higher for longer. Of course, those recession risks feeding in to the market action today. You had a mixed picture over on the close yesterday on Wall Street in terms of how things shook out towards the end of the day. The FTSE 100 currently down 0.8%. The futures, as Francine was saying, pointing sharply lower on these concerns, increased concerns about recession risks. We have the data coming through as well, and we'll break those down for you in terms of French CPI and consumer confidence, at least business confidence here in the UK, falling to a 15-month low. The French CAC aren't now lower by 1.7%. Over in Spain, the IBEX dropping 98 points, down 1.2%. Let's switch it over and see how things are playing out, and then cross asset again after that mixed close on Wall Street. S&P futures pointing to losses of more than 1%. The US 10-year yield 306, just a move of 2 basis points lower in terms of the US 10-year. And in terms of the sterling, 121, you're seeing a bit of strength, 0.2%. Part of that is down to dollar weakness. You did have GDP coming in for the first quarter in line with estimates, 0.8% increase in GDP. But again, that sentiment survey for businesses here in the UK falling to a 15-month low. Brent oil in focus ahead of the OPEC meeting later today, $115 a barrel, down 0.8%. Francine.
Tom, let's dig a little deeper into these sectors and actually have the 19 sectors that make up the Stock 600. All of them are on the downside. So I have basic resources losing the most, some 2.3% lower. Then I have technology, retail, also some of the consumer products. Telecoms, look, telecoms are not doing too badly. They're still down, but only 0.2%, which is why we have a nice shade grading there of red. And then you have media also down some 0.6%. So everything in the red, but it's definitely basic resources that are losing the most, Tom.
Yeah, we saw the chip makers over in Asia and the US under pressure on concerns that you're going to get a supply glut towards the end of the year on weaker demand and higher stockpiles of semiconductors. ASML then, we're pulling that out for you to see how that's being reflected in the European chip making space, currently down 2% on the back of this. Expect a big move here for Uniper, of course, the German energy company, on news that it is in discussions for a potential bailout with the German government, withdrawing its guidance for 2022. Of course, the geopolitics of gas, Russia and Ukraine central to this company. So we will get back to that one when we get the move. In terms of Aston Martin, news that they are looking for additional funding, maybe a significant new investor, currently down 1.8% for that luxury car maker. Okay, let's get over to Bloomberg's NLive managing editor, Mark Cudmore. Mark, you're looking then at analyst forecasts for global stocks. They remain very bullish.
Yes, very much so, Tom. This is about earnings forecasts. I normally try to use this segment to draw viewers' attention to something that might be a little bit under the radar. I'm not today. Everyone knows this. Analysts are behind the curve. Equity analysts are behind the curve. They tend to be when we get a regime shift. They tend to kind of chase the macro narrative a little bit. But I think the reason I'm kind of going to a theme that we know very well, that equity forecasts are very, very bullish despite the decline in equities we've seen this year. The reason I want to show it is because it's just so dramatic. So this is a chart of the 12-month blended forward earnings for the MSCI All Country World Index. So we can see that it's just off a record high, about 0.3%, the record high basically ever seen for earnings. And that's despite the fact that for the last few weeks, all we're talking about in every economy is when is a recession going to come, how bad it's going to be. And that's why we've seen bond markets rally, we've seen yields come down. We've talked that that's the reason for equities decline. And yet equity analysts still believe it's going to be a record earnings. At some point, they're going to catch up, and that's probably going to weigh further in equities. And this is one of the prime reasons why I think we still have a lot more downside for global equity markets later on this year.
Okay, Bloomberg MLive Managing Editor Mark Cudmore, thank you very much on the reckoning potentially ahead for analysts, whether or not they need to downgrade their forecasts as we face up to a potential recession. Talking of which, one of these companies that I had in our stocks to watch this morning, we're getting the move now, significant move lower for Uniper, down 15% after withdrawing its guidance. And there are reports of potential talks between this energy company, of course, a giant within the German space, and the German government for a potential bailout. This, of course, after Russia cut gas exports to the Eurozone, to Germany as well. So Uniper under pressure on the back of that news, withdrawing its guidance for 2022. Francine?
Yeah, it's quite a fall down,
Yeah.
15%. Now, in Sintra, inflation was, of course, at the top of the agenda. Christine Lagarde warned that price pressures are here to stay.
I don't think that we're going to go back to that environment of low inflation. And I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we are facing now, that are going to change the picture and the landscape within which we operate.
But the heads of the ECB, Fed, and Bank of England all wanted to keep their options open when I spoke to them about policy response.
I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this was unpredicted.
I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we are facing now.
If we see greater persistence of inflation, that's second round effects, then we will act more forcefully.
The path back to 2% inflation while still sustaining a strong labor market, we believe we can do that.
As the uncertainty will clear on various accounts, we will have to certainly be less gradual.
It's quite clear that as we respond to this shock, we want to have those options on the table.
I think that, the bigger mistake to make, let's put it that way, would be to fail to restore price stability.
Well, joining us now is Greg Davies. He's Chief Investment Officer at Vanguard. Greg, thank you so much for joining us. I mean, I have a lot of sympathy, actually, for a lot of the central banks. I know markets give them a hard time. I know we got a laugh when Jay Powell said, look, we just don't know. What we know now is that we don't know how to read inflation. But how deep will this inflation be? Could it come back as quickly as it came?
You know, it's a really interesting question. I think the Fed is doing the best they can in terms of the information that's coming out. They've been pretty aggressive in terms of, tightening monetary policy. And so we do believe that by the end of this year, you will start to see some relief when it comes to inflation risk in the U.S. and more broadly. But again, they're going to be very data dependent, depending upon how the data comes out and how aggressive they need to be. But we know monetary policy operates on a lag basis, so they have to wait and see to some degree.
Yeah.
Greg, good morning. Is inflation or recession the bigger risk now for global equities?
I think right now, and most folks are concerned about inflation more broadly, right? So how aggressive do the variety of central banks need to be to try to contain inflation? Part of it is out of their control in terms of supply. But one of the things you have to recognize is the fact that to the extent they start cooling global economies, demand should go down, which should ultimately have some impact on inflation and prices. So they're trying to be as aggressive as they can, but we'll have to wait and see. And as many investors want to see the data and the information right away, but we know monetary policy operates on a lag basis, so it will take some time.
But should it operate on a lag basis? Because, I mean, I think also the job of central bank is say, this will happen in 6 months, and so I need to set policy now, not wait for it to see, was it a mistake to wait for the white the whites of the eyes of inflation before they acted?
Well, I think there were a number of indicators that inflation was starting to get a bit unhinged, and so you could make the argument that they should have been more aggressive at the beginning, but most people did not expect for there to be a war between Ukraine and Russia, so that was a new factor that came in. There's no easy button when it comes to monetary policy. They need to figure out, based upon the information that's coming in, you'd have to argue that if you look at five-year forward inflation expectations in the U.S. market, they're somewhere around 2.1%. So the market gives them credibility. The market believes they will be successful over time, but we will have to wait and see.
So, some parts of this market now, Greg, pricing in a rate cut as soon as 2023 from the Fed. We know a lot of people have moved into cash as dry powder amid this uncertainty. Is that the trigger point? Is that what investors should be looking for to get more exposure to equities?
I think we always argue that investors should be diversified, be balanced, and thinking about the long term. So there's always going to be periods in markets where you're going to see some volatility like we saw at the beginning of this year. And so for us, we try to tell our investors, stay focused on the long term, whether or not that means saving for retirement, saving for a house, your kids' college education. but do it in a diversified, low-cost manner. And to the extent that you have your portfolio that gets out of line because of a major drawdown in equities, rebalance back into that to keep your allocation proper.
Greg, I think you're expecting, though, what, interest rates to be at 4% in the next 18 months if the Fed really wants to deal with inflation. And what does this mean for equities and bonds?
Well, I think, look, when we think about the equity market right now, and primarily if you look at the U.S. market, we still believe that the U.S. equity market is a bit rich relative to our fair value estimates, which takes into account inflation and interest rates. So we think U.S. equities are still somewhat overvalued, but when you look at the international markets, we do believe they offer more value for investors. So when we think about the next 10 years or so, we're thinking that U.S. equities are going to return somewhere in the neighborhood of about 4.5% per year for the next decade, but international equities, because valuations are so much lower, are probably going to produce somewhere in the 7 to 7.5% type range. So there's definitely opportunities out there. You have to be a little bit more selective.
That's an interesting call on international equities going forward. But I just want to go back to your point about U.S. equities still looking a little bit rich to you. So how much more of a drawdown do you expect to see at this point?
Well, if you were to take a look at where we think about fair value, if U.S. equities go back to the top end of our fair value range, you're talking about another 5% or so. If they were to get into the midpoint of our fair value range, you're talking to closer to 10 to 15%. So there could be some more pain, but it depends on how aggressive the Federal Reserve is and also how the economy ends up shaking out over the course of the next few months.
Greg, I mean, I have a viewer, actually, Anthony, that writes in almost every day, so thank you so much for taking such a keen interest in the market open. But he's saying, he's getting real interested in treasuries with the 3-month 10-year spread. I mean, do you have a favorite indicator?
Yeah, for us, one of the things we always look at is, number one, financial conditions. So how tight are financial conditions, the impact that's going to have on a broader economy. The other thing is really looking at 5-year forward, break-even inflation. So what is the market expecting in terms of the credibility of the Fed and what the market believes what's going to happen with interest rates? So those would be probably the top two. But then also when you take a look at the shape of the yield curve. So if you look at 3-month Treasury bills, which are still, tighter than what the 10-year, lower rates relative to the 10-year, that hasn't inverted yet. So that would be one of the primary indicators in terms of recession risk.
Yeah.
Treasury's bid again this morning, marginally. You're seeing the 2-year yields down about 4 basis points at 3, just below 3 a couple of seconds ago. Have we reached the end of this bear market for bonds?
I think when you start thinking about the short end of the curve, so you think about what's happening with 2-year notes and Treasury bills, the Fed is still expected to raise rates, somewhere in the neighborhood of 175 basis points between now and the end of the year. So there's still going to be pressure on the very front end of the curve, but that's what the market is pricing in already. So again, it's not what's going to happen; it's what's priced in if investors are trying to outperform.
Do you buy gold in this kind of environment? I mean, we also don't know whether we see a gas embargo. And this would, change everything really for Europe.
Well, for our investors, what we tend to try to counsel them on is stay focused on the major asset classes like bonds, stocks, and cash. We try not to tell folks to go overweight to commodities because, again, it tends to be somewhat more idiosyncratic. But for a long-term portfolio, equities, bonds, and cash is the primary way to allocate.
Greg, thank you so much. Greg Davies there, Chief Investment Officer at Vanguard, stays with us. Now, coming up a bit later in this program, a landmark summit for NATO, as the alliance also promises to bolster forces on its eastern flank. We'll get the latest live from Madrid. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Welcome back to the Open. We are 14, almost 15 minutes into your European trading day. You're seeing losses now, pretty pronounced across European equities. 1.5%. Future stateside pointing to the losses of between 1.3 and 1.5%. S&P minis pointing low by 1.3%. Nasdaq futures pointing low by 1.5%. And there's been a big move into bonds as well. Most pronounced, in fact, at the front end, the German Bunds. 2-year, you're looking at a move lower by 14 basis points. The 10-year, in terms of German Bunds, 143 now, an 9 basis point move lower. Similar picture, less pronounced BTPs, Italian BTPs at 3.3, and across the US yield curve, you're seeing the biggest moves, as we were discussing with Greg Davis shortly, at the front end, so a 5 basis point move lower, 299 now on your US 10-year. Greg, let's bring you back in at this point then. Greg Davis, CIO of Vanguard, very happy to say he's with us in the studio. Greg, where are you finding opportunities within the fixed income market?
You know, when it comes to fixed income, we've seen some pretty substantial increase in terms of yield spread. So when you think about investment-grade corporate bonds, you think about high yield, the valuations there have become quite a bit more attractive since the beginning of the year. So for investors who have, again, a longer-term time horizon, you've seen a repricing in terms of interest rates. You've seen spreads widening in IG and high yield and even emerging markets. So there's some real opportunity for investors that, again, have a longer-term time horizon.
Where specifically?
You know, again, we think about it more broadly. So think about investment grade more generally. So we have portfolios that cover the whole range of every sector you can imagine. So again, what we try to tell investors is stay highly diversified when it comes to those portfolios and not specifically in individual sectors per se.
That call that you made before the break, that international equity is going to outperform US equities over a longer time horizon. What is the catalyst? Is that a valuation story? Is that a China revival story? What's on the back of that?
The biggest part of it is really valuations. When you look at global equities, PE ratios are around 10 times. When you look at the US market, it's closer to 17 times. So there's a huge gap between the two. And so again, we think about, you've seen, you know, central banks across the globe tightening policy, but again, you're starting at a place where international equities just have such a tailwind because valuation's so much more attractively priced relative to what you find in the US marketplace.
Greg, how much do you actually look at regionally, for example, the UK, because of Brexit, some labor shortage here, and the specifics of inflation, and how that's attractive because of valuations compared to, you know, Europe or the US or elsewhere?
I mean, I think the way we think about it is probably more driven by the fact that, you know, the impact of inflation, energy, and things of that nature with the crisis that's happening in the Ukraine and everything else. The impact that it has on the energy market in Europe and the UK specifically, and the impact it's having on food prices, those are things that are seriously contributing to inflation risk in this marketplace that are going to be much more difficult for a central bank to get under control unless they really staunch demand. And so that's something we absolutely take a look at.
I know you take the broad view, but if I can pin you down on the question of technology, mega cap US tech, and the drawdowns you've seen there, and these are companies many would argue have very strong balance sheets, a lot of cash on hand. What would you say to investors looking at the drawdown in US mega cap tech?
You know, what we'd say in that space is ultimately, again, they've had a really strong run over the last 10 years, right? And so it's not uncommon that after you've had such significant outperformance when you look at growth relative to value, to see some of the air come out of the balloon. Do we think these companies will do well long term? Absolutely. But again, it's difficult to time the market. And we tell investors, again, have exposure, but you want to do it in a diversified way versus going all in on mega cap growth just because we've seen underperformance year to date.
Greg, if there was something, you know, to go wrong in terms of liquidity, and I don't know how you need to start thinking about that, is there a place in the market where you see it first?
Well, I think, you start to see stress. You start to see stress in, lower quality assets, right? So when you start thinking about, how's the high yield market trading? How's emerging markets trading? When things start to get very dire, you even start to see an impact when it comes to U.S. Treasury markets, on the run versus off the runs. How are inflation protected securities trading? When those markets start to show much wider bid-offer spreads, or it's difficult to actually get trades done, you clearly know there's a problem. But the good news is that we've seen the central banks step in to the extent they need to help provide liquidity and provide support to markets. So again, they're focusing on making sure the markets still function in a very robust way. We get calls from the Fed and the Treasury Department on a regular basis about market functioning.
We couldn't let you go, Greg, without a comment on active versus passive. There's an argument that this is the year for active management as the central banks withdraw that stimulus and financial conditions tighten the last decade or so. It's been easy for passive in the indexes like Vanguard to post the kind of gains that we've seen. That dynamic has changed. What is your pushback to that, if you do have one?
So look, we do both. We have active as well as index, and what we say to investors is that it's critically important they understand what they can control, and it's around cost. So we do believe there's active management, you can add value doing that. The challenge is many active managers charge too much for the alpha that they generate. So what we try to do is, if you're going to do active, make sure you do it in a low-cost manner.
Okay, Greg Davis, thank you very much indeed, Chief Investment Officer of Vanguard, joining us live in the studio here in London. We have some live lines now crossing the Chinese President Xi Jinping arriving in Hong Kong. This is his first visit outside of mainland China in about 890 odd days since before the pandemic, since early 2020, or I should say near the beginning of the pandemic, early 2020. So this is the first time that we have seen President Xi Jinping leave mainland China. Now, of course, he's coming to Hong Kong. He's arriving in Hong Kong to mark the 25th anniversary of the handover of that city from the United Kingdom to China back in 1997. He's also going to be there for the inauguration of the new chief executive, the incoming chief executive as well. So he'll be there. There's been some concerns, of course, about the number of COVID cases in Hong Kong, and there's been some speculation that Xi Jinping would not, in fact, make it into Hong Kong, particularly as the incoming chief executive, a number of his team tested positive. But so far, it seems he is landing, he is arriving. Not landing, he would have crossed over from the land border from Shenzhen. He is arriving in Hong Kong, first time he's left mainland China for almost 900 days.
Yeah, can you imagine leaving your home country after 893 days? I don't think we have details on his itinerary just yet, but he's expected to then stay overnight, I think, next door in Shenzhen. Coming up, a landmark summit for NATO as the alliance promises to bolster forces on its eastern flank. So we're live in Madrid, where the NATO summit is taking place. That's coming up shortly, and this is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Today, allies recommitted to the pledge we made in 2014 to spend at least 2% of GDP on defense.
Such countries as India and China, they're big countries, they're respectable countries, but if they want to be also leaders of the world, they must develop empathy and develop empathy now.
There's no reason that Mr. Putin needs to view any force posture changes on NATO's eastern flank as a provocation. NATO is, will be, always has been a defensive alliance.
I expect that allies will agree that China poses or is a challenge to our values, to our interests, and to our security.
Well, some of the high-profile attendees there at the NATO summit in Madrid speaking to Bloomberg. Joining us now from Madrid is Bloomberg's Maria Tadeo. Maria, great reporting on the ground. We're reaching the end of the summit that has put NATO back towards combat mode. So, fundamentally, what's changing?
Yes, Francine, and they say, of course, NATO is a defensive alliance. By combat mode, what they mean is that you have to get ready and be prepped for what the NATO Secretary General says is a competitive global context that will get dangerous in the future. Now, Francine, in terms of the takeaways from this conclusion, and again, that document that sets out the agenda for NATO for the next 10 years, they now say the Russian Federation is the most significant but also most immediate risk to NATO security. They say that this is a country that now aggressively is seeking to reestablish its sphere of influence and control at times by annexation, so a clear indication of the war in Ukraine. They also say, by the way, what a reality check for European countries. Do not take your security for granted, but also prepare to spend that 2%. That is not the ceiling, it is the floor. Continue to invest. That was the message from the NATO Secretary General. And then when it comes to China, Francine, it is worth noting the language around it. They do not say it's a risk, but they say it could be a challenge in the future. They point to the major military spending that they're committing that say that could be a risk. It could intimidate neighbors in the future. And also a lot of concern behind the scenes from officials here at NATO that China could come at one point to the assistance of Russia financially, but also potentially militarily. And just to wrap it all, of course, a commitment to help Ukraine for as long as the war goes on.
Maria Tadeo on the ground in Madrid. Thank you, as ever, for the updates on NATO. Coming up, joining the 50 basis point club, the Riksbank policy decision is due in just over 3 minutes' time. We will have the decision for you. This is Bloomberg.
nuestro
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, here are your top stories. Jay Powell, Andrew Bailey and Christine Lagarde say they're ready to ramp up measures to fight price pressures, but they also warn of a new era of sustained high inflation as French CPI hits 6.5%. Activity recovery while Chinese manufacturing expands in June for the first time in 4 months as COVID curbs ease. Plus, NATO members commit to a 7-fold increase in battle-ready troops, its biggest upgrade since the end of the Cold War. So, Tom, if you look at the markets, it's not looking great. There's also maybe some positioning taking as it's the end of a quarter.
Yeah, the shake-ups across portfolios, and in terms of the data, the CPI data, the inflation data across the Eurozone, mixed. You had that big jump higher above the estimates for Spain, Germany coming in a little bit softer, French CPI out earlier this morning, coming basically bang in line with estimates. You also had some data out of the UK as well on GDP, in line with estimates, 0.8% for the first quarter, but also a survey on business sentiment falling to a 15-month low. It is significantly risk-off this morning, though, after a mixed picture on Wall Street yesterday. And again, the central bankers that, of course, Francine sat down with yesterday, really painting a picture of higher inflation for longer. All of them, of course, committing to get down to their targets around inflation. The FTSE 100 currently down close to 2%, 1.85%, a drop of 135 points, 7,176. The DAX is lower by, look at that, 2.4%. Autos is a big factor there, and the stocks Europe benchmark currently down 1.8%. We have an announcement from the Riksbank. It is expected, of course, it was expected. Let's get the details out from Danny Berger then on the latest from Sweden's central bank. Danny.
Yeah, bang in line with what economists expected, a 0.5 percentage point increase to their key policy rates. That means we're going to be at 75 basis points for it. Every economist surveyed by Bloomberg, save for one, expected this, so not a surprise. They say that the rate by the start of next year will be around 2%. Morgan Stanley, for example, they expected the terminal rate to be slightly above 2%. So this represents a ramping up of policy, more aggression from the risk bank. Following on from that, they say that they're going to shrink their assets in the second half faster. Their purchases for the second half, 18.5 billion Swedish krona. That's less than they had announced previously. So the immediate reaction we're seeing in the currency is some strength coming through from the krona. It's gaining about 0.3% versus the euro. I should point out, though, Jesper Peterson over at Danske Bank says that a hike in line with expectations of just 50 basis points. This is only going to be a gut punch temporary reaction of strengthening in the krona. Recall, it is the second worst performing G10 currency so far this year. So that weakness is leading to fears of imported inflation. So faster interest rate hikes, getting close to 2%, that might help strengthen it. It might also be an admission by Riksbank that they're willing to get more aggressive, Riksbank rather, get more aggressive, amp up policy, potentially hurting the housing market, which many in Sweden think is fragile at this moment. So again, continued strength from that krona, but there is some expectations that that will not likely last, given that they didn't surprise hawkishly.
Thank you so much, Ardeni Berger, then the Swedish krona at 10.2115. Now, some of the world's most important central bankers, of course, were on stage at the ECB forum in Sintra yesterday with Jay Powell, Christine Lagarde, Andrew Bailey, and Augustin Carstens, all striking a hawkish tone about the future of the global economy.
The U.S. economy is actually in pretty strong shape. So if you look back a year, the U.S. economy grew more than 5.5%.
We also have this recovery that is very much underway, that is certainly driven by services because of the swing that we've observed from goods.
When I look at the UK economy at the moment, it's very clear that the economy is now starting to slow. We are at something of a turning point in that respect.
The labor market is tremendously strong, still averaging very, very high job growth per month.
We have very low unemployment numbers, high employment participation.
So overall, the U.S. economy is well positioned to withstand tighter monetary policy, we think. Is there a risk that we would go too far? Certainly there's a risk. But I wouldn't agree that it's the biggest risk to the economy.
It is that economic outlook that is having a knock-on effect on global industries, including, of course, autos. In fact, today, autos is the sector that's taking the heaviest losses, down 2.5% just in the first few minutes of the open, of course, 34 minutes into the open. Goldman Sachs has recently cut their sales and production volumes as well. Let's bring in George Galliers, then, head of European Autos Research at Goldman, for more on this. Just explain your decision, then, to downgrade or to lower your forecasts around both production and volumes, George, and when you start to see things turning around.
Yeah, thank you very much for having me. So the primary driver of our cuts remains the supply chain constraints, which continue to weigh on automotive production globally and most notably in the second quarter. Whilst we do expect to see some sequential improvement in the second half, the transparency remains very low, and that lack of transparency stretches into 2023. But obviously, also from a sales perspective, we're not blind to what we're seeing with respect to the consumer. The macro data point, which has the strongest coincidental relationship with auto sales, is consumer confidence. And clearly, we've seen a huge drop-off in consumer confidence in both North America and in Europe.
George, overall, is there, some autos that will do the best? I mean, not all automakers, of course, are created equal. Do EVs need to get much cheaper before there's real mass demand for them? Or how do you see that developing?
With respect to EV demand, what we would say is actually EVs are arguably the one bright spot that we're seeing in global automotive at the moment. So while sales are down generally across global regions, with respect to battery electric vehicles, volumes are up 71% year to date in the UK, just over 60% when you look at Europe more broadly. Part of the reason for this is they are being prioritized by the OEMs when allocating semiconductors and thinking about production. But we're also seeing tremendous strength from the consumer. As we look out to outer years, the landscape for EVs in Europe is largely going to be forced by the regulations. As you're aware, from 2035, presently, it's proposed that vehicles with internal combustion engines will no longer be allowed to be sold in Europe.
And George, we can't, of course, talk about EVs without talking about just the sheer number of chips that they do require. So where are we in terms of that constraint around semiconductors? There was pressure across the chip space, in fact, in Asia and the US earlier on the back of concerns that you may get a glut in semiconductors by the end of this year. Do you align with that view? Where are we in unfolding those kinks in the semiconductor supply chain?
I think the commentary that we hear from the manufacturers is that things are steadily improving sequentially. However, as we look through to 2023, it's not clear that we will have a full easing with respect to the supply chain. One of the complexities here is that there are many different variances in the semiconductors across the automotive industry. In fact, one of the tier one suppliers cited that there are around 20,000 different semiconductors within their product portfolio. So clearly, whilst we might be seeing some easing and availability of certain semiconductors, in order to build a car, you're only as strong as your weakest link. And therefore, we really need a complete easing of the entire supply chain.
And George, how fast can that happen? Because semiconductors have been such a problem, are we going to be awash with them in 18 months, 24 months? And what does that mean for the global supply chain?
Yeah, I mean, with respect to the semiconductor supply chain more broadly, obviously, my focus is the automotive sector. But I think that from an automotive perspective, we are expecting a significant easing in 2023, and we're hopeful that by 2024, we should be back to normalized production from an automotive standpoint.
George, what are you seeing in terms of price discipline from the automakers, their ability to maintain margins as concerns grow about a recession and the pressure that we're seeing on consumers?
The price discipline is proving very strong at the moment. So if we look at the industry as a whole, volumes are running around 19% below peak. This is actually consistent with a recession. So production is already running at recessionary type levels. And it seems that the consumer is still in a slightly better place than that, which is enabling OEMs to demand pricing. If we look at the commodity cost inflation for OEMs this year, we approximate it's roughly 300 to 400 basis points of headwind. And across the board, OEMs are communicating that they're able to price this through to consumers. Certainly, when we look at the pricing data, we're seeing improvements, not just year over year, but Q2 pricing looks to be something in the magnitude of 20% lower discounts relative to what we saw in Q1 for many of the OEMs under our coverage. And we don't really see the pricing discipline eroding until we start to see a restock of dealer inventories. As a reminder, dealer inventories in both Europe and North America are running at all-time lows with respect to new cars.
George, thank you so much. George Gallier is their head of European autos research at Goldman Sachs. Now, coming up, disclosure drive. Hundreds of financial companies push major emitters to be more transparent about their carbon footprint. We speak to Paul Dickinson, the chair of CDP, the nonprofit that set the standard for global environmental disclosures. That's next, and this is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
welcome back to the Open. 43 minutes into the European trading day. Risk off on recession fears. European stocks lower by 1.5%, and bonds are bid. You're seeing that most pronounced with German 2 years at the front end, currently down 11 basis points. BTP is also bid, as are gilts. And across the yield curve in the US, you're seeing yields lower by about 5 basis points 2 year, currently at 298, the 10-year 305. Let's get back to what is happening then across environmental disclosures. More than 260 financial institutions are demanding that nearly 1,500 major companies, including Tesla, up their environmental disclosure game. The investment firms want major emitters, including Saudi Aramco, ExxonMobil, Glencore, and others, to report their environmental impact through CDP. That is the non-profit, which operates a widely used disclosure system. Paul Dickinson, CDP chair, joins us now. Good morning, Paul. What is the rationale for the naming and shaming then of these companies? And walk us through some of the names on the list. It won't surprise many that Saudi Aramco's on there. Tesla, though, and Volvo may come as a surprise.
Well, that is a bit of a surprise. And I mean, you put the figures exactly on the screen perfectly, but they need to be understood within a little bit of a context. So this is the 20th annual cycle of CDP. And last year, it's been growing every year. Last year, 13,000 of the world's largest corporations reported into the CDP databases, representing about 64% of global market cap. And then our data goes out on all the Bloomberg terminals, and people like MSCI and S&P buy our data, and it's inside all the environmental products. So what you're drawing attention to is a specific campaign to say, why are these specific companies not doing what everyone else is doing? Some big companies have been reporting to us for 20 years. So why would an Exxon or a Tesla not report? That's the question.
Yeah, but Paul, I mean, I guess the problem, if you really dig down, is that there are a lot of reporting disclosures. There are other kind of organizations like yours that have other metrics. So if Tesla does not want to be under your scrutiny, is this a concern?
Yeah, I would draw actually a distinction between there are various organizations that operate in this field, and they mostly advise companies what they should put in their annual report, their annual filing. CDP is a separate kind of pre-regulatory reporting platform. But I mean, you've got to say, if 64% of the world's market capitalization is using something, why wouldn't leading companies like Tesla? That's really the question. And the key point is, we're not so much about rating companies. We simply gather data and allow the markets to use it. Just like financial reporting, when you report into your regulator, whether it's the SEC, Edgar, Companies House, whatever it is, then that data is then used by the markets. So this is really just about getting data to the market so they can do what they do well, which is evaluate companies.
Just specifically, Paul, why should investors be concerned if a Tesla or a Volvo or an ExxonMobil is not making these declarations?
Yeah, because climate change is like a really big deal now. I mean, when we started, companies would report to us, but they weren't quite sure how serious it was. But 20 years is a long time. And we now see extreme weather, absolutely changing public attitudes in every country in the world. We see enormous moves towards decarbonization. We see huge changes in technology, massive amounts of renewables, sectors like autos changing completely, food. And this kind of vast trend, climate change is like the internet. It gets bigger every year. It never goes away, and you have to learn to make money from it. If investors and the capital markets haven't got the data they need to evaluate who are going to be the winners and losers, that's a problem for the markets.
But Paul, how confusing is it that actually you all use different models? I mean, there's also the ISSB. We spoke to Emmanuel Faber on this. There's the TCFD. I mean, why do we not have a global standard that's regulated worldwide, end of story, and you can actually see what financial companies are doing?
Well, two answers there. One of the reasons we don't have a global standard is that governments are a little bit like mice, I'm afraid, and corporations are a little bit like lions, and it's quite hard for the mice to kind of regulate the lions. But I think you'll find that the TCFD is essentially a brilliant initiative that brought together under the central bankers and the FSB great accounting standards. They were largely based on CDP. CDP is redesigned around TCFD. So when companies are reporting to CDP, they're reporting in line with TCFD. And the ISSB is simply coming along straight after us and turning what we do into a regulation. So all we are is a regulatory impact assessment based on TCFD. That's basically almost just one CDP and then the annual report with its regulatory requirements. It's a lot simpler than it looks. But what we've got to recognize, it's not that there's a problem with data or different types of data. We've got to take action on the data.
Paul, a number of big financial institutions backing this call for greater disclosure from these companies, including the likes of Aviva and Amundi. How good are financial institutions themselves at making these disclosures?
Well, that's very complicated, actually, because the issue with financial institutions is that they have sort of scope 1 and scope 2 emissions, as we call it, as the fossil fuels and the electricity you purchase. That's pretty simple. But they're, so to say, scope 3 emissions relate to essentially what they own or they're custodians of for their clients. And that can be 700 times their own kind of emissions. So we are getting into an area where financial institutions are sort of learning very quickly how to evaluate what are low and high carbon investments. And of course, this has come out in a lot of debate recently about ESG. But I think, we're going in one direction here, which is that we have to reach kind of net zero by 2050. Everybody agrees on that. So the real question is, how are financial institutions going to move the trillions, invest in the technologies?
Paul, thank you so much. Paul Dickinson there, the CDP chair. Thank you. Now let's get straight to the Bloomberg First Word News. Here in London is Laura Wright. Hi, Laura.
Hi, Francine. London's Heathrow and Paris Charles de Gaulle airports are cutting more flights as Europe's travel chaos continues into the summer. Heathrow has asked airlines to cut 30 flights from their schedules amid concern that peak passenger numbers will exceed the level it can safely handle. France's Civil Aviation Authority has ordered a 17% reduction in flights out of the largest Parisian airport due to a strike by firefighters. Car makers increased their UK production for the first time in almost a year as record petrol prices helped accelerate the shift to electric vehicles. Industry data showed output rose 13% in May, with EV output more than doubling. The number of cars produced was still only about half the pre-pandemic level for the month. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Okay, Laura, thank you. And Francine had her own experience of travel chaos.
Don't get me started. Go on for an hour. It's an absolute carnage, absolute nightmare.
And when are they going to resolve it? They need more staff and they need them quickly. Okay.
They never actually unloaded the baggage.
So the baggage is still there somewhere, or you're getting some of it back. The travails of the constant traveller. Okay, coming up, OPEC and its allies are meeting today and are expected to ratify a supply increase for August. More on that story next. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 53 minutes into the European trading day, and you can see stocks are dropping. U.S. futures also dropping. There's a bit more concern about a possible mounting recession. Now, OPEC and its allies are meeting today and are expected to ratify a supply increase for August. Traders will likely be more focused on what the cartel does after that. Now, the decision may ultimately hinge on President Biden's trip to Saudi Arabia next month, and when he's expected, of course, to look for help in bringing prices down. Well, senior U.S. energy advisor Amos Hochstein spoke or hopes that OPEC will do more to boost supply.
I think that the first step of them announcing additional supplies a few weeks ago was step one. I'm very hopeful that you and I can have this conversation about step two sometime in the near future.
Let's bring in Bloomberg's energy markets reporter, Anthony Di Paola. Anthony, thank you for joining us. I mean, do they even have any spare capacity, even if the Gulf were to help the rest of the world?
Yeah, this is the big question in the market at the moment. We think that the UAE has said that they've got about 4.2 million barrels a day of capacity, and they're producing somewhere around 3.5. So they've got some spare capacity. There are a lot of doubts around Saudi Arabia. That's considered the central bank of oil. They've been for a long time the swing producer, being able to bring oil on when it's needed. So the debate for the Saudis really now is, if they've got that spare capacity, how much do they bring on now, and how much do they keep their powder dry for later if something else happens? So there really is a question about what the Saudis can bring on. You mentioned OPEC earlier. They're going to run out those production cuts that they had put in during coronavirus. So by the end of August, they should be up to about 11 million barrels. And that's a big, that's a big level of production for them.
So, Anthony, what are you looking for then from OPEC later today?
Well, as you said earlier, in the run-up to this, we're looking for them just to kind of rubber stamp that decision, roll over what they've already said they would do in terms of around 600,000 plus barrels a day of increase pledged for August. That's already been announced. And then the real focus is what happens after that. Once all those production cuts are exhausted and producers are back to their normal levels, where do they go from there? And that Biden trip to Saudi Arabia in July will really be key for that. So we're going to be looking to, as Amos said, that part two of that decision in terms of what the Gulf countries can do in terms of increasing production.
Okay, so looking at OPEC later today, and of course the president's visit to Saudi Arabia later in July. Bloomberg's energy markets reporter Anthony Di Paola, thank you. A couple of redheads. German unemployment rising by 133,000 in June. The estimates were for 5,000. There's some context here around Ukrainian refugees in that country. Germany has absorbed a number. Israel also, lawmakers there dissolving parliament. New elections seem to be on November the 1st then for Israel.
Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup, of course, of some of the market action. It's also the end of the quarter. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I don't think that we're going to go back to that environment of low inflation.
The path back to 2% inflation while still sustaining a strong labor market, we believe we can do that. That is our aim.
If we see greater persistence of inflation, that's second-round effects, then we will act more forcefully. It leaves options on the table, and that's very deliberate.
I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we're facing now, that are going to change the picture and the landscape within which we operate.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Price shock. French inflation hits a new record, piling more pressure on the ECB. Euro area CPI hits the wire tomorrow. Global central bank chiefs ramp up the fight against rising prices. We've got more from our keynote policy panel yesterday in Sintra. Plus, NATO members commit to a seven-fold increase in battle-ready troops, its biggest upgrade since the end of the Cold War. Now, let's check in on the markets. This is a picture across the board. We're seeing a bit of pressure at European stock 600. Now, there's also maybe a bit of position taking or certainly a bit of a change because it is the end of the quarter. So portfolios could be changing on the back of it. But you can see technology, one of the ones that are getting slammed the most. Basic resources also on the downside. There does seem to be a lot more focus on the markets about a possible recession. This is one of the things that we're watching out for. It could be on the back of central banks once again warning about inflation, but when I moderated the panel yesterday, I have to say they were pretty measured. When after the 90 minutes, I would say central bankers were pretty balanced. Yes, they worry about inflation. It could be persistent for longer, but there was certainly not a panic mood or nothing hugely new that we found out. So it's interesting, the anxiousness of the markets out there, and maybe anything that they say makes them worried about what's coming up. But Bitcoin, 19,398. There was a big, important report actually from JP Morgan on crypto. This is a picture across the board when it comes to Europe. Now, there is something that we need to watch out is Mr. Stoltenberg, of course, of NATO, talking at the moment, briefing reporters. We could also get President Biden in that speech or in that press conference shortly. That's happening in Madrid. And then across the board, it's really sector-based, the sell-off. So it's basic resources, some of the technology. So you're not seeing a huge difference between the FTSE MIB and the DAX or even the FTSE. They're between 1.6 and 1.9% lower. Now, stay tuned because later this hour, we also have a conversation about inflation with the Bank of France Deputy Governor. She's Sylvie Goulard. And French inflation quickened to the fastest since the euro was introduced. raising pressure on the European Central Bank to do more to contain the shock for firms and households. Now, the key focus for the ECB president, Christine Lagarde, will be on the reading for the entire 19-member Eurozone due tomorrow. Well, joining us now is Bloomberg's Western Europe economy team leader, Zoe Schneeweiss. Zoe, great to speak to you. Now, French inflation just hit a Euro-era high in June. Will this lead to a lot more pressure on the ECB to act firmly?
Yes, as you said, it just hit 6.5%. That's primarily due to energy and food. Now, the thing that we need to keep in mind here, compared to the other euro area countries, France really is doing incredibly well on inflation. They're best in class here. And that's because the French government has been so generous and has spent so much money, spent billions and billions of euros to keep this down. The French stats office says that inflation would be 1.5 percentage points higher if it weren't for these measures. And that really means that 6.5, while obviously painful, can't compare with the others. Now, with looking at the broader euro area, the ECB is under pressure to do something. They've announced that they're going to start hiking rates for the first time in more than a decade next month. 25 basis points is the base case here. However, earlier this week, several policymakers told my colleagues in Sintra that a 50 basis point hike could be on the table and should be something at least should be considered. And given these numbers, and Spain yesterday at 10% really was a shocker, it is something that we expect to keep, at least to be talk about this in the weeks going up to the rate decision.
So European inflation, of course, expected to hit 8.5%. What are we looking at for in the Eurozone? I mean, what really worries central banks is de-anchoring expectations. And I don't know how you model that. Like, do they realize they've de-anchored when it's too late?
That is obviously a grave danger here. 8.5% probably won't be the highest, so we don't quite know when inflation will peak. That's primarily, though, due to energy. Now, and while it's spilling over into food, the worry is that it would also spill over into services. That is something we've had in the U.S. If you compare how U.S. inflation is made up versus how euro area inflation is made up, the U.S. situation is much more dangerous. Services there is a main driver, and that's because of the red-hot U.S. job market. And services inflation isn't something that will fade again when prices fall. That's something where central banks actually have to do something. And that explains why we have these jumbo rate hikes out of the U.S., whereas the euro area really has been very slow about this and only will start next month, although really from the start of the year, we've had one record inflation rate reading after the other.
Thank you so much, Zoe. Bloomberg's Western Europe economy team leader, Zoe Schneeweiss. Now, joining us is Sarah Hewen, head of research for Europe and Americas at Standard Chartered Bank. Sarah, always great to speak to you. I mean, I guess the concern is that the market wants to know so badly what central banks are thinking and are doing that they almost, price in everything before, the central banks are clear about what they're doing.
Yes, I mean, normally for central banks, that's great because they let the
do the job for them.
do the job for them. But in this environment where there is so much uncertainty about how far rates are going to have to rise, about how high inflation is going to go, and now increasingly about recession risks, that I think everybody is pretty much in the dark. So we are seeing these sort of big swings in sentiment and markets from day to day.
Yeah, so how do you see inflation developing? I mean, there's a couple of things. Paul Krugman was saying that actually he thinks the ECB is perfect and shouldn't do anymore. And he also went as far as saying, as when you look at U.S. inflation, the number one risk to the economy is the Fed overdoing it. Do you think inflation can go down as quickly as it came?
I think that it can go down. I think maybe markets are becoming too nervous about the upside risks, and particularly about the how far inflation will endure. And of course, that's the message that we're getting from central bankers, that inflation is set to stay high for a long time. They need to do something to tackle it. But if we look at what's driving inflation, it still is largely food and energy prices. And those prices, we think, will exert a negative drag drag on inflation certainly by later this year. In the US, we're seeing durable goods prices already falling. So I think you have to be quite careful about not overestimating how far inflation could rise.
But this is the problem, is that a lot of central banks are waiting for data, and I understand that, and I give them a lot of credit what they're doing, but it means that they can be significantly behind the curve because of, how monetary policy works. There's always quite a big lag.
Absolutely, and they're having to estimate how far the jobs market is going to shore up inflation. So that's the real issue now. We see very strong jobs, very strong employment across Europe, across the US, and indeed globally. And this is leading to nervousness that wage inflation will start to pick up. That's the big no-no as far as central bankers are concerned. Once we start to see wage price spirals coming in, then it's very difficult to tackle inflation.
And does that come from literally everyone talking about the cost of living crisis? I mean, have we gone beyond that? Because I had my neighbor who's 80 asking me about the cost of living, and I know it's not a lead indicator, but that's what all people are talking about.
Absolutely, and we're seeing real incomes being squeezed quite dramatically across the board. So naturally, those in work are looking for higher wages. So it's imperative that headline inflation does start to come down. And it may well be the case that we do get falling headline inflation before we start to see wages accelerating. That would be absolutely the nirvana for central banks.
Does the UK have it worse than everyone else because of also, domestic pressures, the labour market extremely tight, and a lot of staff after also having left the UK?
Yes, Andrew Bailey and indeed most of the central bankers yesterday at Sintra, of course, were talking about the supply side and how they'd misunderstood the supply side risks. But I think that's particularly pertinent in the UK, where on top of the pandemic, we have the Brexit impact as well. And we see that in wages picking up, but still, of course, very severe real wage contraction and increasing calls for strikes and indeed increasing strike action across the country.
Is there anything that the Bank of England can do now to nip that in the bud? Do they just have to be much more aggressive?
They may need to be more aggressive. They have to be cautious as well, of course, because we are starting to see some signs of a slowing economy. They've already acknowledged that they may need to bring about a small recession to get inflation back to target, but I think they would hope to avoid that.
Sarah, thank you so much. Sarah Hewen, their head of research for Europe and Americas at Standard Chartered Bank, stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. London Heathrow and Paris Charles de Gaulle airports are cutting more flights as Europe's travel chaos continues into the summer. Heathrow has asked airlines to cut 30 flights from their schedules amid concern that peak passenger numbers will exceed the level it can actually safely handle. France's Civil Aviation Authority has ordered a 17% reduction in flights out of the biggest Parisian airport due to a strike by firefighters. Now, the EU's chief Brexit negotiator says he won't contemplate a hard border on the island of Ireland. In an exclusive interview with Bloomberg, Maroš Šefčovič said the EU cannot accept Britain's plans to, quote, unilaterally and illegally amend the Northern Ireland Protocol. The UK introduced a bill into Parliament early this month to allow ministers to rip up parts of the agreed framework.
I would not even consider these possibilities because this is definitely not in the cards. We are very clear with that, with our Irish friends. I think that was a huge point of preoccupation in the United States. I mean, I had a lot of meetings with the senators and the congressmen in the White House, and we, under no circumstances, should put the gains of the peace process under question marks.
And car makers increased their UK production for the first time in almost a year. Record petrol prices helped accelerate the shift to electric vehicles. Industry data showed output rose 13% in May, with EV output more than doubling. The number of cars produced was still only about half the pre-pandemic level for the month. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 20 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I could talk to you for hours about my travails of trying to get back to London yesterday because of the carnage at Heathrow, but it's probably for another time, Leanne. But certainly something that will bring a lot of misery to a lot of the Brits traveling over the summer if it continues this way. Coming up, we talk global markets, inflation, and risks with Sarah Hewen. If you have any questions to any of our guests, please send them on IB Plus TV Go. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think we now understand better how little we understand about inflation.
That's not very reassuring.
No, honestly, this was unpredicted.
I think that there are forces that have been unleashed as a result of the pandemic, as a result of this massive geopolitical shock that we're facing now.
If we see greater persistence of inflation, that's second round effects, then we will act more forcefully.
The path back to 2% inflation while still sustaining a strong labor market, we believe we can do that.
As the uncertainty will clear on various accounts, we will have to certainly be less gradual.
It's quite clear that as we respond to this shock, we want to have those options on the table.
I think the bigger mistake to make, let's put it that way, would be to fail to restore price stability.
Well, that was Fed Chair Jay Powell, ECB President Christine Lagarde, and BIS General Manager Augustin Carstens warning of a longer-lasting inflation at the ECB forum in Sintra. Now, still with us, Sarah Hewen, Head of Research for Europe and Americas at Standard Chartered. First of all, Sarah, what's the probability in the U.S. of having a recession that's inadvertently engineered by central bank policy?
Well, our own models do suggest a 55% chance of recession in the next 12 months. So we've really tipped over from the the balance has tipped over into a greater likelihood of recession than not. And I think that this is most likely to be the result of tightening monetary policy. We're seeing some signs already, some warning signs, softer activity, tighter financing conditions, housing market, of course, struggling. And I think that what we're yet to see is a slowdown, a real slowdown in consumer spending. So let's see what the data say today.
But how did we get it so wrong in the U.S.? Because, this feels like it has a lot more to do with stimulus, because they're not as, of course, they don't have that proximity that Europe has to Russia and therefore the energy shock.
That's right. I think that it's really trying to address what has been a global surge in inflation and managing that in a way that doesn't cause a steep slowdown. Now, so far, so good, but I think the warning signs are there, and perhaps the Fed will have to pause before carrying on, perhaps as far as the market is expecting.
Sarah, are we underestimating the impact this has on emerging markets? Of course, if you look at emerging markets, I mean, I know they're not all created equal, it depends on structural reforms and things like that, but they have, of course, they could have a huge shock because of dollar strength.
Yes, and I mean, we've already seen some really dramatic impact, of course, across particular countries, Sri Lanka, but also across a number of African countries. And even those countries that you would expect would be doing well from high commodity prices are struggling because of the fiscal costs and because of outflows of funds. Where we have seen some positive developments is in Asia. We're seeing a lot of Asian economies emerging from the pandemic and really gearing up on activity. Inflation has not been such a big negative there so far, and of course the food crisis has been less impactful.
Sarah, overall, what kind of, is there anything else that really worries you about how we're measuring things? So if we look at, you know, the comings and goings of markets, and we discussed this a little bit at first, are we thinking that, you know, central banks can fix everything? We're in a higher rate inflation environment where they are not controlling the economy like they have in the past.
Yes, and of course they continue to stress that they cannot influence oil prices, they can't influence food prices when there is a supply-side shock. But what they can influence are inflation expectations, and they've all acknowledged that what they're trying to do is rebalance demand and supply. Essentially, their job is to do the demand side, and that's what we're expecting, softer demand, which ultimately prevents inflation from spiraling higher.
Sarah, what's the biggest, difficulty in modeling for you right now? If there's a gas embargo from Russia, how difficult is it to understand the second and third round effects, for example, of Germany having to shut down certain sectors?
A gas embargo, we're pretty clear, would be recessionary for not just for Germany, but also for Europe in general. I think that the difficulty comes in this constrained supply that is not a complete cut-off, and how far economies can adjust to that. Obviously, Europe has done a lot to try to wean itself off Russian energy, but for gas, it's impossible to fully be independent. And yes, a real weaponization of gas, as we're seeing at the moment, does carry some severe risks for the economic outlook.
Sarah, thank you so much for joining us today. Sarah Hewen there, Head of Research for Europe and Americas at Standard Chartered Bank. Now, coming up, European Commission Vice President and the EU's Chief Brexit Negotiator, Maros Sefcovic, on the Northern Ireland Protocol. That story is up next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're looking, of course, at Madrid with the latest on NATO. President Biden has arrived. There was a brief press conference by the Secretary General of NATO, Mr. Stoltenberg. We'll see what the decision will be today on, of course, certain things. There it is. Mr. Stoltenberg still speaking. We could have comments from the President of the United States of America or not, but we'll keep on top of that. Any breaking news, we'll bring it to you. If the President starts speaking, we may also listen to what he has to say. Now, the EU's chief Brexit negotiator has told Bloomberg that the UK's plan to override the part of the Brexit deal governing trade in Northern Ireland won't work.
On the sides of the European Union, we are absolutely ready, despite of all the difficult issues which are currently on the table, and extremely intense work all of us in the European Union are doing to make sure that we will help and assist Ukrainians, and at the same time we will deal with all the consequences the war has on energy security, on food security in Africa, and all the problems linked with that. So despite of all that, as I said, doors is open. We are ready to talk, but we need the acknowledgement that what needs to be done would be a genuine negotiations. That it shouldn't be some kind of window dressing. Okay, we've met, we took the picture, we negotiated, but you know there could be only one outcome of this negotiation, and this is what is written in the bill. Because, I mean, you are not going to negotiate when you have a gun on the table or when you have, I would say, very clear results, what you want to achieve. And therefore, I'm appealing again, let's come back to the table. Let's work on genuine joint solutions, which would be within the agreements we sign. And I can assure everyone and give you my word that from our side, we will be looking for smooth operation of the protocol, for looking for the ways of using maximum flexibility, because we just want this to work. We want to bring the best possible results for the people in Northern Ireland and move to the next, I hope, brighter stage of our EU-UK relationship.
Well, that was European Commission Vice President Maros Sefcovic. Plenty more, of course, on the markets and on politics. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Price shock. French inflation hits a new record, piling more pressure on the ECB. Euro area CPI hits the wire tomorrow. Global central bank chiefs ramp up the fight against rising prices. We have more from our keynote policy panel yesterday in Sintra. Plus, NATO members commit to a 7-fold increase in battle-ready troops, its biggest upgrade since the end of the Cold War. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, later this hour, we have a conversation with the Bank of France Deputy Governor, Sylvie Goulard. So send in your questions, of course, for the Deputy Governor through IB plus TV Go. Now, the ECB's forum in Sintra, over for another year. One of the key takeaways was that some of the world's most important central bank chiefs are warning of a shift to a world with persistently higher inflation. Now, this is causing many to have to tear up their playbooks of the last 20 years, including how to tackle problems around economic growth.
The U.S. economy is actually in pretty strong shape. So if you look back a year, the U.S. economy grew more than 5.5%.
We also have this recovery that is very much underway. That is certainly driven by services because of the swing that we've observed from goods.
When I look at the UK economy at the moment, it's very clear that the economy is now starting to slow. We are at something of a turning point in that respect.
The labor market is tremendously strong, still averaging very, very high job growth per month.
We have very low unemployment numbers, high employment participation.
So overall, the U.S. economy is well positioned to withstand tighter monetary policy, we think. Is there a risk that we would go too far? Certainly there's a risk. But I wouldn't agree that it's the biggest risk to the economy.
Now, for more, we're joined by Bloomberg economist Jamie Ross. So, Jamie, have we actually reached peak inflation in Europe?
No, I don't think we have. I think we've probably got another couple of months. I'm expecting that inflation is going to hit 8.8% in August, teeing up a challenging September meeting for the ECB. And inflation generally is going to overshoot the ECB's forecast in the near term.
Jamie, what were your key takeaways from the discussions? I mean, I had a feeling, first of all, it was extremely difficult for them to commit to anything. I think they didn't want to, upset the status quo. They didn't really want to, move anything or signify everything to the markets. But they did sound, a lot more hawkish maybe than we would have thought a couple of weeks ago.
Yeah, I think that's exactly right. And when you were there, and it was a great interview. But they did sound more hawkish. I think there was a kind of there's more acceptance that what's happening may cause recessions, and a willingness to accept that could be the consequence, which is a slight change in language, certainly from Powell. And the other thing that surprised me was just the acceptance that Lagarde had of the changing environment for inflation. If inflationary pressure is going to be higher forever, interest rates are going to have to be higher forever as well. And this, of course, is going to cause a lot of problems for the ECB and for the periphery in Europe.
Does the ECB have to backstop Italy's debt in order to keep the euro area, intact and control inflation? And again, it's almost a political decision. So how do they get around that, Jamie?
Totally. I think it's, someone has to backstop Italy's debt if the euro is going to, thrive. Whether that's the ECB or whether that's a fiscal solution, we're going to find out over the coming couple of years, I should think. For the ECB, it's a really difficult thing to craft a tool that will actually have enough clout to soothe markets because of exactly that political question. Ultimately, this is a fiscal issue. It needs to be dealt with a fiscal solution, and the ECB is kind of marching in trying to provide a stopgap.
Jamie, thanks so much. Jamie Rush there with the very latest, of course, on what ECB and the Fed and everyone else can or cannot do. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. London Heathrow and Paris Charles de Gaulle airports are cutting more flights as Europe's travel chaos continues into the summer. Heathrow has asked airlines to cut 30 flights from their schedules amid concern that peak passenger numbers will exceed the level it can handle safely. France's Civil Aviation Authority has ordered a 17% reduction in flights out of the biggest Parisian airport due to a strike by firefighters. Now, China's economy showed further signs of improvement in June with a strong pickup in services and construction as COVID outbreaks and restrictions were gradually eased. The official non-manufacturing PMI climbed to 54.7, the highest in more than a year and well above the consensus forecast of 50.5. The manufacturing gauge rose to expansion territory. And the EU's chief Brexit negotiator says he won't contemplate a hard border on the island of Ireland. In an exclusive interview with Bloomberg, Maroš Šefčovič said the EU can't accept Britain's plans to, quote, unilaterally and illegally amend the Northern Ireland Protocol. The UK introduced a bill into Parliament earlier this month to allow ministers to rip out part of the agreed framework. And car makers increased their UK production for the first time in almost a year as record petrol prices helped accelerate the shift to electric vehicles. Industry data showed output rose 13% in May, with EV output more than doubling. The number of cars produced was still only about half that of pre-pandemic levels for the month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Great to have you back in London, Francine.
It's nice to be back, Leanne, despite all the trials and tribulations actually getting through London. But that's a story for another day, the carnage that is Heathrow at the moment. Now, U.S. National Security Council Coordinator John Kirby says there's no reason that the Russian President Vladimir Putin should view the bolstering of forces in NATO's eastern flank as a provocation. Now, here's more of what he told Bloomberg's Anne-Marie Hordern in Madrid.
There's no reason that Mr. Putin needs to view any force posture changes on NATO's eastern flank as a provocation. NATO is, will be, always has been a defensive alliance. The reason we have to do this is because Mr. Putin has been the destabilizing influence on the continent. Mr. Putin decided to invade a sovereign neighboring state. Mr. Putin is the one who is the aggressor.
Now, joining us from the final day of the summit is Bloomberg's Maria Tadeo with some great reporting on the ground. Maria, first of all, NATO definitely singles out Russia and China. How's the alliance shifting its strategy for the future?
Yeah, absolutely, Francine. And some of the language there is really striking in the document that allies approved yesterday. Of course, that sets the agenda for the next 10 years, the big priorities for NATO. And I want to read you some of the language around Russia, because this is really very striking. Of course, allies say that Russia is the most direct and significant threat, but they also say when you look at the Russian Federation, it is trying to reestablish spheres of influence, direct control by subversion, aggression, and annexation, clearly a reference to Ukraine. The message yesterday, particularly for the European nations, says, what a reality check. Do not take your security for granted. Invest in it and we'll stay together. When it comes to China, it did feature too in the conclusions. The language, of course, arguably is not as aggressive as it is on Russia, but it did say that China is a challenge for the future. It pointed, of course, to the major spending that is going on infrastructure infrastructure and military spending. That could be a sign of intimidation for neighbors. And then once again, NATO reiterating that it is disappointed by the fact that China has not condemned the war in Ukraine. And the real concern, Francine, behind the scenes, and this is really the talk among officials, is that concern they have that Russia could potentially at one point ask China for help financially, also militarily, and the Chinese could agree to it.
But how, Maria, does that strategy get tested in Ukraine?
And Francine, that is really the bottom line. You know, this is great on paper, but Ukraine will really put that resolve to the test. Yesterday, NATO repeated, we're in it for the long run. We will help Ukraine win the war for as long as it takes. That really doubles down on the match, or the words from the G7. And again, President Zelensky yesterday said, okay, if Russia is the biggest threat, then help us because we're the #1 target. But Francine, there are concerns about the public opinion, particularly as we enter the winter and we see the economic fallout of this, and they worry that perhaps some of the public opinion, which until now has really helped Ukraine, that may start to change as a result of the repercussions of it. For the time being, on paper, the NATO alliance says we're going to continue to help Ukraine. They have to win the war. The repercussions of Ukraine being defeated could be enormous, particularly for Eastern Europe.
Maria, thank you so much. Maria Tadeo there with some great reporting for us on the ground at the NATO summit in Madrid. Coming up, French inflation hit a record high, pressure ramping up on President Macron. We'll be speaking with the Deputy Governor of the Banque de France, Sylvie Goulard. That's coming up next, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, French inflation has quickened to the fastest pace since the euro was introduced. CPI hit 6.5% in the year to June. Energy and food prices drove the reading higher, ramping up the political pressure on President Emmanuel Macron, while also potentially contributing to calls for tighter monetary policy. Now, we also have, of course, this report assessment of risks to the French financial system. This just came out this morning by the Banque de France. In it, of course, they talk about cross-cutting analysis of vulnerabilities, cyber risks, what it means for the real economy, and they also touch on risks to commodity markets. Well, joining us now is Sylvie Goulard, Deputy Governor of the Banque de France. Thank you so much for joining us, Madame Goulard, on this very important day when you look at some of the risks to the French economy. First of all, on your report, you talk about debt, and this is something that could possibly get worse as we deal with these energy swings and, of course, also inflation going higher. What's your main concern for the French economy right now?
Well, thank you for giving me the floor. Actually, it is a report of the financial risk, and we do this report every 6 months. So it's the picture where we are now, and just as a reminder, in January, we were before the war, and we could not predict what happened. Inflation is very high. Maybe the French don't realize that it was less high in France than in other countries of the euro area and other countries in the world. So the central bank on the monetary side is going to act according to the mandate to preserve price stability. What we are looking at now is the impact, for example, on the banks. There are negative elements, but there are also positive elements in terms of margins for interest rates, as the French deposits are not rewarded in any way. So we are looking at all these elements, and our message now is so far so good. We all know that the amount of public debt and private debt of the non-financial companies is quite high in France compared once again to the major economies. So we look at it carefully. Yeah.
I mean, if you look at the risks of the French financial system, first of all, I have to applaud you because you have a wonderful chart laying out very, very simply, easy to understand, and other complex issues. You basically point to 3 cyclical concerns, and this is, market risks, it's stress to rebalancing conditions, and also pressures on profitability of financial firms. And then you talk about the more structural aspects, right, which is basically cyber threats and climate change. How much do you worry about some of these market dislocations?
Well, at this stage, there is no dislocation. Once again, we consider that the risks are high. The risk links to the macroeconomic downturn are high. The stress refinancing conditions are there, and we look at the scenarios we have ourselves published recently in the worst case scenario, of course, with the kind of embargo of energy, etc. We all know that in this case, the prices will go even higher than they are right now. And on energy, central banks are not at the forefront. And on the pressures on the profitability, as I said, there are pluses and minuses. For insurance companies on life insurance, you have to look at it carefully. For the banks, it's a little bit differentiated. But all the efforts we made since the great financial crisis to increase the resilience of our banks and other institutions are now having an effect. We have banks that are well capitalized, and we are not worried on this front.
How should investors look at the high amount of government debt? When does this start being a concern, especially if we need to see further spending, actually, from the government to face all of the uncertainties in the next 6 months?
I'm not a member of the government, and Bruno Le Maire himself said on Monday that the situation was serious. So if I may, it's the duty of the government. Now, we have 2 sorts of debts. The COVID debt was necessary and was a reaction to an emergency situation. The important thing is to go back to levels of debt that are sustainable, not just to please Brussels or to meet criteria, but because it's in the interest of the country. And I'm confident that this government that is insisting a lot on the French sovereignty will do what is necessary to keep it under control.
Yeah. How should we look at risks emanating from crypto, digital currencies?
Well, this is very interesting. What we experienced in the last months is a real stress test, if I may say so, of what cryptos are. And I recommend investors to be careful. It's a less regulated field. We are used to be quite protected in our markets. The crypto world is less backed by regulation and supervision. So what we observed is, to a certain extent, something that has to do with the very speculative nature of crypto. So we are looking at it. We need, of course, global regulation. The FSB is working on that. but we are by far not where we should be in terms of regulation. So to all investors, be careful.
And how do you view, for example, markets in this post-Brexit world?
Well, I wish we would be really post-Brexit. We had an agreement. The agreement was signed and ratified, and the only thing I can say as a central banker is that I'm confident that people are going to respect the rules they have themselves negotiated. What is sure is that, and we observe this in the war, we need to have a strong system if we are under attack from countries that would not dislike to play with all the divergences we have between us. So we should really hurry up. For the rest, we supervise the institutions based in Paris. We have the European rules. The passporting is always possible from one EU country to another one. And we are on the side of the Irish people to defend the Good Friday's Agreement. Because stability is part of prosperity.
Thank you so much for joining us today. Sylvie Goulard, there, the Deputy Governor of the Banque de France, of course, on this very important stability report for the financial markets. Now, we're also getting some breaking news out of Russia, and this is according to IFX. This is a Russian news agency saying that Russia has been withdrawing troops to facilitate grain exports. Now, this is something, a piece of news that would be huge, of course, for global wheat prices. It's something that a lot of market participants, also just a lot of citizens of the world, had been hoping this would happen just because of the amount of wheat and grains that's been sitting in parts of the sea that haven't been able to shift. Russia has said that they will withdraw some Black Sea troops to help the grain exports, and on the back of it, we've seen some wheat swings. Chicago wheat has been swinging as Russia says it has withdrawn some troops. You can see the wheat there over, priced in the U.S. Now let's get straight to Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. One of Europe's biggest automakers says the car market could collapse if electric vehicles don't get cheaper. Stellantis was responding to a landmark EU deal to phase out internal combustion engines by 2035. The maker of Jeep, Fiat and Peugeot cars say unless the cost of making EVs is cut by 40%, demand will be crushed. Now, Grayscale says it's suing the U.S. Securities and Exchange Commission after its application to convert its Bitcoin trust into an ETF was rejected. In a meeting with the SEC last month, Grayscale argued the plan would unlock as much as $8 billion in value for investors. The regulator found the proposal didn't do enough to prevent fraud and manipulation. And Google has been attacked by European consumer groups who accuse it of putting users on a fast track to surveillance when they sign up to an account. Consumer organization BEUC says the company may be violating privacy laws by steering people to an intrusive system where everything they do is monitored and exploited. Google says the option it now presents are clearly labeled and designed to be simple and understandable. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Coming up, the White House looks to OPEC for a further boost in oil production ahead of the cartel supply meeting today. We'll discuss that next, and this is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think that the first step of them announcing additional supplies a few weeks ago was step one. I'm very hopeful that you and I can have this conversation about step two sometime in the near future.
Well, that was senior White House energy advisor Amos Hochstein speaking ahead of the OPEC Plus meeting today, and the outlook for oil may ultimately hinge on President Biden's trip to Saudi Arabia next month, when he's expected to look for help in bringing down prices. Now let's bring in Bloomberg's energy markets reporter Anthony DePaula. Anthony, great to have you on the program today. So what are we actually expecting from OPEC?
Good morning. Yeah, today will be a rollover of the decision they took last month. We're talking about August production. They're going to bring some production back, about 600,000+ barrels a day. That's going to be a rollover of that decision that they already took for these 2 months, July and August, and that will exhaust the production cuts that OPEC Plus had put in for the coronavirus. So once they finish those cuts in August, then from September through the end of the year, that's really what we're looking for to see where additional production is going to come after that, Francine.
So what exactly does it mean? You know, first of all, who has the firepower to pump more oil, and what are we expecting from President Biden's upcoming trip in Riyadh?
Yeah, and in fact, that trip is the main point, the main thing where we're going to see kind of this inflection point in terms of production. We won't hear much about it today. They'll save the real news for then when they do reach a deal. If Saudi Arabia and UAE, these are the two countries that have the spare capacity, if those are the ones that go ahead and do decide to increase production, the Saudis may be reticent to do that. There are some doubts in the market as to whether they have that spare capacity. If they do have it, the Saudis tend to want to keep it in case they need it, to bring more oil production on in case there's an emergency or some kind of need in the market. So they like to keep that role as the central bank or the swing producer of oil. If they've used all their spare capacity, they kind of exhaust that role. The UAE's got some production, and they're really eager to bring that to market and make some money for all the investments that they've been doing, Francine.
Anthony, thanks so much as always. Bloomberg's energy markets reporter there, Anthony DePaula. Now, in the meantime, we also look at the markets. It is the last trading day of the quarter, so we could see readjustment of that. But much more, it's also a concern about possible recession. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, and Edwards here in London. And this is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Fighting inflation and winning this battle is the single most important thing. Facing central banks.
Even if we have recession fears, the central banks are in a very, very tricky spot.
We think there's a high risk of recession, particularly if the Fed goes really hard and fast the way they're talking about.
Even if we get a recession, it's going to be, or it's likely to be, short-lived and not as big as we think.
This isn't a market unlike we've ever seen before, and I think that these growing pains and this volatility really does create opportunity.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
Good morning. It's 10 a.m. in London, 5 a.m. here in New York, and 5 p.m. in Hong Kong. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lines in New York City. Anna Edwards with us out of London. Our top stories today. The first half of the year is ending with European stocks and U.S. futures down. Central bankers around the world are again warning inflation is here to stay, and they're going to do something about it. China's Xi Jinping returns to Hong Kong and declares the city has been reborn from the ashes. It's an apparent reference to the sweeping security law that crushed dissent there, and it's one of the biggest changes to NATO's defense planning in decades. The alliance will boost the size of its high readiness force almost sevenfold as it keeps an eye on Russia. So we do have futures down on concerns central banks are going to worry about inflation much more than they're concerned about a recession. Kaylee Lines has a look at the markets in Asia. Kaylee, what do you see?
Well, broadly, it definitely was a down day to end the month of June, end the second quarter, and end the first half of the year in Asia. You had Japan, South Korea, Hong Kong lower, so the MSCI Asia Pacific Index as a whole was down on the day. However, the one exception to that was actually China, where the CSI 300 was higher by more than 1%. We got PMI data out overnight that was north of 50 for both the manufacturing and non-manufacturing gauges. So back back in expansion territory for the first time since February. Services especially strong as the economy reopened from some of those pandemic restrictions. You're starting to see the rebound. However, when you look across other asset classes, while equities were down, bid into safe havens, the typical kind of risk-off sentiment. We saw yields coming in places like Australia and New Zealand, and the Japanese yen, which of course has been weaker as of late, is actually strengthening against the dollar today in a bid for safety, Anna.
Yeah, absolutely. We're seeing that same safety bid taking place here in Europe then, Kaylee. Let's start with European stocks, though, and this is the red picture we have for you, almost red everywhere across the European continent, as we factor in ongoing concerns, greater concerns about recession and where the European economy goes. And as Matt was referencing in the headlines there, European stocks are set for their worst half year since 2008. Such are the losses that we've seen for European stocks since the start of 2022. Let me show you some assets in focus, and to Kaylee's point about money going into fixed income, we're seeing that in Europe. I've selected the French 5-year yield, but we could have selected all kinds of assets here. They're buying bonds, yields coming down, and all of that. Recession fears are to the fore, it seems, driving that. And despite the fact that we've seen inflation data out of France taking another leg up, but coming in line with expectations. German utility Uniper in focus today. This is, as I say, a German utility, and they are in discussions with the German government about a possible bailout of the business. All this connected to the rising price and the tighter control of Russian gas flowing from Russia into Europe. And I'm also keeping an eye on the iTraxx crossover index. This is a measure of the cost of insuring against default for European corporates, and it is rising. It is rising to levels that we have not seen, Matt, since the early days of the pandemic, over 600 basis points, and that has European corporate default in focus.
All right, well, we are looking at futures that are down here right now more than 1% to end the month, the quarter, and the half. I heard Carolyn Hepker on Bloomberg Radio today say this has been the worst quarter for the 60-40 portfolio since 1988. So it didn't help if you held bonds. Right now, we do see investors buying 10-year debt. 3.0593 is the level there. So coming down a little bit, but still solidly above 3%. And I think the story about central banks yesterday was a requiem for inflation. I've got to remember to look up requiem later, but the idea is that all the central bank leaders from Europe, from the UK, and from the US are saying they're going to put inflation-fighting measures first and worry about a recession second. That's part of the concern, bringing down futures and bringing down interest rates right now. Crude coming down just a little bit, 109.68. So we're still looking at basically 110 a barrel for Texas Intermediate, and this has been a horrible month for the first down month, actually, for crude since November. So it's been a long run of monthly gains for crude. We're going to have an OPEC meeting today. Don't expect any surprises there. And then Bitcoin right now down 5% from midnight. $19,183 is where Bitcoin is priced now. And the losses for this quarter have been around 58%, I believe, for Bitcoin. So a horrible quarter. In fact, the worst since the third quarter of 2011, when Bitcoin fell from $16 to $5. That puts in perspective what 19,170 looks like. So, Kaylee, we have seen a big drawdown's a word I've been reading a lot lately. I think drawdown is the new word for the quarter. It's the new word for losses, although I'm not sure everyone's using it correctly.
Yeah, well, there's a lot of synonyms you can use. The point of the story is for a lot of assets, Matt, it has been a brutal second quarter and frankly, a brutal first half of the year. Now, we are almost to the second half, but not quite. We have to get through today first, and there is a lot going on in the day ahead, including Chinese President Xi Jinping leaving mainland China after nearly 900 days at home. He's visiting Hong Kong for events marking 25 years of Chinese rule in the former British colony. We also have the OPEC Plus alliance set for an easy meeting as it cruises to the conclusion of a 2-year pact on oil supply constraints. And finally, President Joe Biden will be holding a press conference at the NATO meeting in Madrid, but that's happening at 8 a.m. New York time, Matt.
All right, let's get to that China story because Xi Jinping is making his first trip outside the mainland in 893 days. Xi traveled to Hong Kong, calling the city reborn since he last visited 5 years ago. Let's get more with Enda Curran, our chief Asia economics correspondent. Enda?
Brief remarks on arrival by President Xi. Like I mentioned, he said Hong Kong has been reborn from the ashes. He spoke about vigor and vitality, and he also talked up this idea of one country, two systems, the idea being that Hong Kong is meant to have some autonomy from Beijing itself. We don't have specifics on his itinerary from here. He did arrive with his wife, who was met by local officials at a train station here in Hong Kong. When he did arrive, also some school children waving flags. We may get more of a substantive speech from him tomorrow when the new chief executive is sworn in.
Well, and of course, Xi Jinping may be going into this trip in a bit of a better mood, considering the economic data we got out of China overnight and looked a lot better.
PMI is back in positive territory, above 50. In fact, the services side of the PMI is at a one-year high, suggesting that areas like logistics, eating out, catering may be getting off the ground again. It does speak to the idea that the economy is stabilizing. But let's not forget the remarks by President Xi himself before he came to Hong Kong. They are sticking with COVID zero. Obviously, there's a public health dividend with that, but a lot of economists will say that will mean economic pain going forward. So this PMI today does reinforce recovery is underway, but nobody's calling it a V-shaped rebound for China.
Enda, thanks very much. Bloomberg's Enda Curran with the latest on the growth story and indeed the travels of the leadership there in Hong Kong. Now, yesterday, Francine Lacqua sat down with the world's most influential central bankers, Christine Lagarde, Jerome Powell, Andrew Bailey, and the BIS General Manager, Augustin Carstens, at the ECB Forum in Sintra, Portugal. Here are some of the highlights.
The path back to 2% inflation while still sustaining a strong labor market. We believe we can do that. That is our aim. The bigger mistake to make, let's put it that way, would be to fail to restore price stability.
If we see greater persistence of inflation, that's second round effects, then we will act more forcefully. As we respond to this shock, we want to have those options on the table.
I don't think that we're going to go back to that environment of low inflation. As the uncertainty will clear on various accounts, we will have to certainly be less gradual.
Francine Lacqua is not in Portugal anymore. She's back here in London and she joins me on set. Good morning to you, Francine. An incredible lineup for your panel to talk about global central banking and how global central bankers respond to the challenges and what they've learned about inflation.
Yeah, and I think they tried as much as possible not to give any guidance to the market. So I think they probably considered success that they didn't really move markets, but we looked at longer term and the fact that this could be a real regime shift for inflation in the next 10 years. Now, what this means is that they are probably willing to risk the economy just to deal with inflation. I mean, look, the one thing that kept on coming up in the debate is de-anchoring of inflation expectations. Now, the real quickest way to get that is if people continue asking for price rises or wage rises, and that would be directly linked to, of course, some of the things that we talk about in the media, the cost of living. And so there seems to be a lot of worry, especially from the Fed. I mean, he said something like, the clock is ticking, that they want to be aggressive, they want to do it now, and then see what happens if inflation were good to go back down. And I have to say, I wasn't reassured by the fact they said, look, they just got inflation completely wrong.
Yeah, they've certainly got a better handle on what they don't know about inflation, I think was one of the lines. Francine, thank you so much for bringing us the highlights. Francine Lacqua with the latest from Sintra. Over to Madrid now for our coverage of the NATO meeting, which of course is underway. Our Washington correspondent, Anne-Marie Horden, joins us. Our European correspondent, Maria Tadeo, also present at the meeting. Let's start with you, Anne-Marie. Anne-Marie, Interfax has reported that Russia says it withdrew some Black Sea troops to help grain exports. I saw an earlier line coming out of the TASS news agency saying about enabling 7 tons of grain to leave a port in southern Ukraine. What's the latest here? What can you tell us?
Well, I think we also need to make sure we remember that what Russia says and does is usually very different. What the Ukrainian army is saying that Russia is leaving that island because they have had come under shelling from the Ukrainian military. But what we do know is that there is widespread reporting that Russia is actually stealing Ukrainian grain, taking it to the Black Sea and shipping it off to what Russia deems, quote, friendly countries, using these sky-high prices due to Russia's invasions of Ukraine, which, of course, Ukraine is considered the breadbasket, especially for European buyers, and selling that as their own. This has been a hot topic, not just here at NATO, but also at the G7 summit in the Bavarian Alps, because, of course, it is exacerbating this war in Ukraine, the prices of what we are seeing in grain. And I spoke to the National Security Council's John Kirby yesterday, and what the Admiral said to me is to get grain out by the Black Sea is going to take a very long time. They've been able to get some Ukrainian grain out via rail, But to get that Black Sea out and have Ukraine go back to shipping via seaborne is going to be incredibly difficult because Russia really controls that area.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horton there in Madrid. She'll be back later this hour with an interview with the Spanish foreign minister. Now, NATO has agreed to the biggest upgrade of its military presence in Europe since the end of the Cold War, putting 300,000 troops on high alert while beefing up European defenses. Let's get more at Bloomberg's Maria Tadeo. Maria, NATO singling out Russia and China as well. How is the alliance shifting from defense to offense?
Well, what a change. NATO still says we're a defensive alliance. We will never attack anyone, but we have to be ready to be attacked. And the NATO Secretary General yesterday, Mr. Stoltenberg, he did say the world, the global context, it is becoming more competitive and it is a dangerous place. Now, special mention to Russia, they do say, and I want to read you some of the language here because it is incredibly striking. If you think back 10 years ago, Russia was not a member of NATO, but it was seen as a working partner. NATO now says the Russian Federation is the most significant and direct threat to security. It is trying to reassert sphere of influence and control by aggression and annexation, clearly a reference to the war in Ukraine. So the message was very clear. Spend in your own security. What a reality check to European countries. Do not take it for granted. The other country that was mentioned, perhaps not as aggressively, but it did feature in the conclusions, was China. They do recognize that the Chinese are spending so much on military infrastructure. That could be a problem for neighbors who may feel intimidated. And the real question, Matt, behind the scenes from officials is that concern that Russia could turn to China for financial and military help in the war in Ukraine, and the Chinese could agree to it. That is the biggest question mark, but it's also the biggest concern when it comes to the Chinese now.
All right, Bloomberg's Maria Tadeo in Madrid. Thank you so much for joining us. Such a pro working through some of that construction noise. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A number of them moving lower today are tied to the fact that we are seeing some pretty big losses now for Bitcoin. It just dropped back below that $19,000 level, already on pace for its worst quarter going all the way back to 2011. And that has weighed heavily on crypto-related equities and continues to do so. Coinbase is down 80% already in the first half, and on this final trading day of that half, it's down another 5% in pre-market trading. You also have big tech stocks moving lower. Those are kind of what is creating a drag on the market as a whole. One of them being Apple, which is down the better part of 2 percentage points. But one upside mover to point out is Spirit Airlines. Yes, we are still watching this saga over who is actually going to get to buy this company. Will it be JetBlue or Frontier? They both have raised their offers for the company in recent days. There was supposed to be a vote today on Frontier's takeover offer by shareholders, but Spirit postponed that again, saying they just need more time to talk to both of these parties. Spirit is up about 2.5% before the bell, Anna.
Yeah, there's more to talk about in aviation then, Kaylee, than just the disruption and the turmoil, but there's plenty of that as well. Now, coming up on the program, John Bilton, JP Morgan Asset Management, Head of Global Multi-Asset Strategy, will get his latest thoughts on where the markets head into the second half of this year and the $8 billion Bitcoin heist gone wrong. More on our big take story. That's ahead. Plus, a hard border in Ireland is out of the question. We spoke with the EU's chief Brexit negotiator.
I would not even consider these possibilities because this is definitely not in the cards. We are very clear with that, with our Irish friends. I think that was a huge point of preoccupation in the United States. I mean, I had a lot of meetings with the senators and the congressmen in the White House, and we, under no circumstances, should put the gains of the peace process under question marks.
About what they call black soot,
caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. I'm looking at inflation data surprises higher and economic data surprises lower right now. This is what central banks are having to deal with, and requiem apparently means death mass. That's why yesterday's stories headlines were all requiem for inflation. Justina Lee, Bloomberg Markets reporter, joins us now. Can they do it, Justina, without driving the economy into a tailspin?
Yeah, I mean, that really is the question that everyone's grappling with right now. And the answer from markets seems to be that maybe not, because we're actually starting to see a lot of the big inflation traits roll over. You know, commodity prices have started coming down. Break-evens, which are these like market indicators of inflation expectations, have also started coming down. But at the same time, we're seeing analysts cutting profit estimates, and a lot of bond traders even starting to price in a rate cut for next year. And that is a sure sign that people are getting worried about recession here.
I mean, does that have to be, once we've seen inflation peak, Justina, does it have to be that sort of linear progress from one theme to the next? Because timing or working out when inflation has peaked globally may be a little complicated. Even in Europe, we've got some quite conflicting signs just this week.
Yeah, exactly. And if, you know, based on what we've been hearing from central bankers this week, they're not changing that narrative yet. I mean, we've heard kind of these few days that they're still talking about that regime shift from years of low inflation to possibly a completely different environment, you know, with like less globalization and kind of the war in Ukraine ongoing. And so it seems like they're still worried about that fight. And I guess the question is also, are we going to be in this period where, you know, stagflationary risk is going to be the headline one?
Justina, as it is the last day of the first half, I'm taking a look at the superlatives. It's the biggest first half decline for the NASDAQ 100 since 2002, for the S&P 500 since 1970, for the MSCI World Index on record. It has been brutal. How much optimism or pessimism is there as we head into the second half?
Yeah, I think people are clearly still quite wary because this is an environment we have not dealt with for years. And on one hand, you kind of have interest rates going up, and on the other, growth expectations kind of coming down as well. And I think it's been particularly acute because for years, you know, a lot of market darlings were trading at very high valuations. Of course, that's everyone's favorite tech stocks, but that kind of clearly was very much dependent on a low rate regime, and clearly that's kind of over now.
Justina, thanks very much. Bloomberg's Justina Lee with the latest on the markets. And for more market analysis, check out MLIV Go on your terminal. That is where you will find the Markets Live blog. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Senate Democrats are working on shrinking the tax increases in President Biden's economic package. Bloomberg has learned it's part of a bid to cut a deal with Senator Joe Manchin and get the legislation passed. The changes could mean that both U.S. corporations and wealthy households end up facing smaller tax hikes. Congresswoman Liz Cheney has warned her fellow Republicans that they must choose between former President Trump or the Constitution. She says they cannot be loyal to both. In a speech in California, Cheney called the former president a domestic threat the country has never faced before. She is vice chair of the committee that's investigating the attack on the Capitol. In Texas, 4 men have been arrested in connection with the deaths of 53 migrants smuggled to the U.S. from Mexico in a sweltering tractor trailer. All of the victims were believed to have been in the U.S. illegally, most of them coming from Mexico or Central America. 2 of the suspects were arrested on migrant smuggling charges, and the other 2 are being held on gun charges. And the European Union's chief Brexit negotiator suggests he won't contemplate a hard border on the island of Ireland. Mauro Sefcovic spoke with Bloomberg's London office. He also said that the UK's plan to override the part of the Brexit deal governing trade in Northern Ireland may hurt European cooperation with Britain on financial services. Coming up, we may talk Brexit, but more likely we'll talk about inflation and the outlook for the second half. John Bilton, JP Morgan Asset Management Global Head of Multi-Asset Strategy, will be joining us. This is Bloomberg.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The first half of the year is ending with European stocks and US futures falling. Central bankers around the world are again warning that inflation is here to stay. China's Xi Jinping returns to Hong Kong and declares the city has been reborn from the ashes. It's an apparent reference to the sweeping security law that crushed dissent there. And it's one of the biggest changes to NATO's defense planning in decades. The alliance will boost the size of its high readiness force almost sevenfold as it keeps an eye on Russia. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. And Matt, still a few hours to go until the start of US trading. European trading very much entrenched in a negative mindset. Recession fears to the fore.
Yeah, absolutely. Basically after Sintra, when all the central bankers told us they are going to fight inflation and worry less about a recession that those higher interest rates could push us into. So we're looking at the same thing here in the U.S. Futures are now down 1.5% right now, and investors are buying U.S. 10-year debt, pushing the yield down to 3.05%. I also think that when you hear, although it was fairly celebratory mood in Madrid, when you hear that NATO is putting 300,000 troops on high alert, that's not necessarily a great sign geopolitically, so I can understand that futures are down. Here we see wheat futures down in Chicago, just about 0.4%. But this is interesting because we are hearing reports that Russian troops have withdrawn from Snake Island, which sounds so ominous. But basically, it's a port where grains are shipped out of Ukraine, which is, of course, considered the breadbasket of the East, or maybe the breadbasket of the world in a sense. And that's why you see wheat futures coming back down. Wheat falling. Bitcoin also down 6% from midnight, and right now under $19,000. I think it's really interesting to watch this huge drop that we've seen this quarter because it's 58% down from the beginning. But it's important to point out that it's the biggest drop since 2011 when Bitcoin went from $16 to $5. So, you know, that's just 11 years ago we were looking at $16 as a really high number. Now it's come down to a low of $18,964. Kaylee, what do you see in terms of the pre-market movers?
Well, Matt, what I really want to do is make fun of you for how hard you are trying to pronounce the H in wheat. But that move in Bitcoin is really what's capturing my attention, because as we drop below that $19,000 level, it's taking crypto-related equities down with it. The likes of MicroStrategy, which of course holds a lot of Bitcoin on its balance sheet, is down 10%. It's already down by about 67% so far this year. And for Coinbase, as we know, it's down about 80% so far this year. It's down another 5.5% or so this morning. And in addition to some of those crypto-tied stocks, basically all of the technology stock complex is lower in early hours as the Recession fears are really at the fore, dragging markets lower as a whole. Tesla is down 2.5%. You also have Microsoft down by about 2 percentage points, Anna.
Firmly in the red here in Europe then, Kaylee. We have European equity markets down by more than 2% in some cases. European stocks, of course, just like many other parts of the world. But here in Europe, the first half of the year has been tough. Europe having the worst half year since 2008 puts it in context, really, when we're looking back to the financial crisis for our comparisons. That's what we see on stocks. Let me show you what's going on in Europe in terms of other assets. And we have the 5-year French yield in focus. I could have picked others in the European space. In keeping with the Treasury picture that we're seeing, we've got buying of bonds taking place, yields dropping, and so a little bit of trying to find that perceived safety of government debt. Uniper is in focus as well. This is a German utility company, and we have this on the board today because this German utility company has confirmed it is in bailout talks with the German government. As a result, we see that stock is down by 16%. Let's get back to the market conversation, and joining us now on set is John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. So, John, really nice to have you with us. We've just been through the gloom of what was the European stocks picture in the first half of this year. Do you anticipate anything better in the second half, or is the second half when some of those earnings estimates start to reflect broader macro concerns that seem to be in the markets?
Sadly, I wish I could say, you know what, it's going to get better from here. But, and I'm structurally, relatively bullish most of the time. But this is a time when I just can't bring myself to be. I'm looking at earnings growth in particular. I'm looking at earnings which globally are still, expected to grow by 10% this year, at a time when margins are beginning to see the squeeze. We had some signs of that in things like the consumer staples in the last earnings season. And I think as we start to go through this earnings season, backward-looking numbers may be just fine. But don't expect much out of guidance, because which corporate executive is going to say, this is okay?
Yeah.
They are probably going to cite labor costs, commodity costs, supply chain issues, and I expect you will see numbers come down. The problem we have, of course, is with rates going up, it's much, much harder for valuations to do the job of absorbing those earnings.
So that doesn't sound good for equities. Where does that leave credit? I know that you prefer credit to equity at this point, but I was just looking at the iTraxx, the crossover index, measure of the cost of insuring yourself against default of European companies, and that's on the rise to levels we haven't seen since the early days of the pandemic, which again sounds a little worrying.
This is right. Well, I think you've got to take your time horizon into view here, because I think what's interesting at the moment is that the balance sheets for corporations are actually in reasonably good shape. They've done a lot of their refinancing. Remember back in March 2020 when the Fed told us we're going to take care of buying corporate credit. Corporates rushed out and they termed out their borrowing. So their balance sheets are in remarkably good shape. Now, it won't stop the short-term risk that spreads widen as equities go down. But if you can sit through that, there's every likelihood that a lot of the corporate credit world will be money good, defaults relatively low over a longer period of time. So probably a bit too early to be, signaling a big green light on credit, but certainly it looks a better asset than equities in our view, because it's about balance sheet strength, whereas equities are going to suffer from that income statement problem.
So the 60-40 portfolio, even as we look at the worst quarter for that portfolio since 1988, you expect that to be the right formula to stick to?
Well, I think what's been very interesting is a lot of the drawdown that we've seen in a 60-40, and it has been a rapid drawdown, as you rightly mentioned. That's come because bonds and stocks have been correlated. Inflation has been surprising to the upside, and generally that means that both assets have gone down together. Back in 2008, when we saw a big drawdown in 60-40s, bonds gave some protection. This time, they've been in on the action, adding to the pain from the equity side. As we move more towards growth being in focus and inflation starts to cool, and there are some signs that it's beginning to level off, notwithstanding Spain's print yesterday, as we start to focus more on growth and less on inflation, those correlations start to work more negatively, so bonds should offer some protection.
Well, John, as you talk about inflation cooling off a bit, and obviously aggressive monetary policy should in theory have a role in that, I'm wondering how short you expect this hiking cycle to be for global central banks, and how quickly thereafter you're assuming cuts will follow.
Well, look, let's see where we land first. I mean, we're expecting to see Fed funds somewhere around 3 3/4 by the first half of next year. So this is a rapid hiking cycle. We saw the Riksbank get in on the action, 50 bips. We've got, Bank of England, the ECB, all talking about the possibility of going 50. So certainly, I think that the prescient problem for central banks remains inflation, and they will keep hiking. Let's look at where we stand at the moment. Rates are still low by any objective measure.
John,
we do expect to see them move quickly.
I want to just get back quickly as we enter earnings season to forward estimates. Analysts have completely failed us. Where do you look for a good picture of how earnings season is going to pan out?
Well, I think what we've got to look at first and foremost is that when earnings come through, you have to go on the data that you have. Revenue data are probably fairly good. I mean, we don't have a nominal growth problem. When you put real real growth and inflation together, actually revenues should do fine. The question mark has been margins. And what we've heard from companies and what we've seen is that margins actually have held up incredibly well. It's only really now that we're beginning to see that pressure come in. So when we think about where to be looking, we would be expecting to see a classical, more defensive rotation. We would expect to be seeing, the healthcare sector, sectors like utilities begin to get a little bit of support, typical risk-off moves. But what we'd also be looking for on any level would be those firms that have pricing power and their costs much more in control, because that's going to matter as margins come in focus.
John, thank you. I think there was a little bit of defense of the analyst in there. I was one for a while, so I feel the need to add the counter to Matt's point there. John Bilton, thank you very much for joining us. So, JP Morgan Asset Management with us on set here in London. Now, coming up live from the NATO summit, we will hear from the Spanish foreign minister. We'll get to that conversation shortly. This is Bloomberg.
Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Let's get back to the NATO summit in Madrid, where Bloomberg's Anne-Marie Jourdain is standing by for an interview with the Spanish Foreign Minister. Anne-Marie.
Thanks so much, Anna. Yeah, that's right. I'm standing by with the host country foreign minister, Jose Manuel Alvarez. Thank you so much, Ministro, for having us here and for having us on Bloomberg Television. Tell us, you're the host country. Would you deem this a very successful NATO summit?
It is a historical summit, genuinely historical. We always say that summits are historical, but the fact that we have put in place a new strategic concept that gives a firm answer to Russia and to the threats in the eastern flank, that the southern flank has been introduced, and we are looking towards the south, that Finland and Sweden have started the way to accede to NATO here in Madrid, makes that we are taking the first decision for a new security order of Europe and our transatlantic allies.
I was just in Bavaria as well. And what you hear from leaders, as I've just heard from you, is that there is a big sense of unity. But what is the fear that all these economic pressures domestically could fracture that unity that you have in face of Vladimir Putin?
We have to acknowledge that our citizens are suffering because of Putin's war, and that inflation...
10% in Spain.
Absolutely. Food crisis around the world, all that is hitting our citizens. It's hitting Spanish citizens. That's why in Spain, last Saturday, the Council of Ministers, we approved a whole bunch of measures to protect our citizens. But unity is the best way to cope with all these problems that are the spillover of Putin's war. And I can guarantee one thing to the Spanish citizens, to the European citizens: if we wouldn't have faced this war with unity as we are doing it, the cost would have been larger, because the instability of war being in Europe, it's unaffordable.
With war being in Europe, has this changed how Spain thinks of their defense spending? There's always been this European way of thinking at times of the U.S. would always come to our defense. But now you have a war on your doorstep of the European Union. Will Spain hit their 2% target?
Our commitment to the 2% target is total, but it's true. There is a public awareness. There is a public awareness that is not because you reject wars, that wars don't come to look for you, and that you have to prepare for military threats, but also for hybrid threats. In the southern flank also, we have pressing issues that can threaten our sovereignty and our territorial integrity, and therefore the investment in military is investment in the Spanish security.
President Zelensky says that he wants the war to end by the end of the year. Many think this is now just turning into a war of attrition. What are you hearing in terms of your partners, in terms of a peace negotiation? Are more willing to almost force the Ukrainians to give something up to bring this war to an end?
Let me clarify one thing first. No one has wanted this war except Vladimir Putin. Neither President Zelensky, nor Ukraine, nor European Union, nor NATO. We have always been in favor of diplomacy, dialogue, negotiation. So we are ready for that. But unfortunately, I don't feel Vladimir Putin to agree with us on what could be the basis for this negotiation. Ukraine is a sovereign country, free and sovereign country. President Zelensky is the president of a democratic elected government, and therefore it's up to them, up to the Ukrainians, to take their sovereign decisions on how they want to do it. My personal feeling, we are still far from a negotiation because one part, Vladimir Putin, doesn't want it.
What about the Leopard tanks? Are you still sending them to Germany?
I don't like to talk about specific military equipment. I think that the best way to help Ukraine to fight for their own sovereignty and territorial integrity, and the best way to defend those civilians, it's not to talk about which equipment, how much, where it's entering for.
But this is getting a lot of attention, though, because the Germans need to okay it. Have you gotten a signal from your colleague Annalena Baerbock that you'd be able to get these tanks through?
What I can tell you is that Spain's commitment to help Ukraine to keep their own sovereignty and territorial integrity is total, and we will continue supporting them.
So it sounds like potentially those tanks could be rolling over soon. Ministro, thank you so much for your time. The host country of the NATO summit, and he's right, it was a historic one. Many officials will say every summit is historic, but this one specifically, as you have Finland and Sweden coming into the fold. Anna?
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horden and the Spanish Foreign Minister joining us there, as she said, the host nation from Madrid. Coming up on this program, the $8 billion Bitcoin heist gone wrong. More on our big take story next. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now we want to keep you up to date with a few news from around the world of cryptocurrencies, a few of those news items that we are following, including the current phase of deleveraging in cryptocurrencies may be over because it's at an advanced state and it might not last that much longer. That's according to JP Morgan. Strategists there arguing multiple crypto company failures shouldn't be surprising, given huge price declines among tokens. Grayscale says it's suing the U.S. Securities and Exchange Commission after its application to convert its Bitcoin trust into an ETF was rejected. In a meeting with the SEC last month, Grayscale argued the plan would unlock as much as $8 billion in value for investors, but the regulator found the proposal didn't do enough to prevent fraud and manipulation. And finally, CoinDesk reports that crypto lender Genesis Trading is looking at a potential loss running into the hundreds of millions of dollars. The report found that the losses at the top digital asset lender are at least partially due to its exposure to Three Arrows Capital and Babel Finance. And as we know, Matt, there's been a lot of pain. Those are just two companies or firms that have felt the fallout.
Yeah, a couple of analysts now saying that we could see Bitcoin fall to, I think, $12,000 or $13,000. That's the lowest target I've heard in a long time. But I will repeat, as I have been saying, Kaylee, last time we had such a bad quarter, it went from $16 to $5. So even 12,000 wouldn't be that bad if you got in 2011. Let's get to one of the biggest heists in history. In fact, maybe the biggest heist in history, although they didn't really get away with the money. Novelty rapper Razzle Khan and her startup guy husband are now facing trial for the $8 billion Bitfinex hack, but some of the proceeds still haven't been recovered. That's the subject of today's Big Take. Bloomberg's Zeke Fox wrote the story for us, and he joins us now. And Zeke, it's a huge hack, and it's made the story even sexier by the horrible music videos that this couple made. But they didn't get away with the money, right? They weren't really living the good life.
Yes, so this hack's been a mystery since 2016 when Bitfinex, one of the world's biggest cryptocurrency exchanges at the time, got hacked and had more than half of their Bitcoin stolen. And only this year did we find out who allegedly was involved. And it was this couple, Ilya Lichtenstein and Heather Morgan, who lived in the financial district downtown. And Heather had a series of extravagantly bad music videos under the name Razzle Khan. And yeah, they seem to be doing pretty well, but they weren't living like someone who was sitting on billions of dollars of Bitcoins. And the reason is that, yeah.
Because it's incredibly hard to then use the stolen Bitcoin when they know where it is. They just don't know who it actually, what wallet that actually belonged to.
Yeah, essentially, when Bitcoins exist as addresses on the blockchain, and once Bitfinex realized it had been hacked, they were able to see where the hackers sent the Bitcoins, and they published those addresses. So for years, anybody could look up these addresses and see where the Bitcoins were. It was sort of like setting off a die pack in a bag of stolen cash, because nobody wants to handle Bitcoins that they know come from a hack.
How did they get caught then, Zeke?
So they obviously, you steal money, you want to figure out how to spend it. And it appears that they had one idea, which was to send some of the stolen Bitcoins to Alpha Bay, which was a darknet market where you could order drugs like it was eBay or something like that. And Alpha Bay was willing to accept deposits of dirty Bitcoins. And then once you withdraw your money from Alpha Bay, the link on the blockchain is sort of broken. Anyone who looks at your new address coming from Alpha Bay can't necessarily link it back to the hack. The problem was that, maybe a little unsurprisingly, law enforcement was onto Alpha Bay. They didn't want to let this, online drug market run. And once Alpha Bay got busted, it appears that the authorities were able to make the connection from the deposit of the hacked funds to Alpha Bay to new accounts on the other side, and then to this couple.
All right, Zeke, just quickly, we only have 30 seconds left. What was your favorite Razzle Khan rap lyric that you came across? Razzle Khan, Razzle Khan.
I have to say, I was impressed by her. It's either amazing coincidence or like crazy audacity. She even raps about her hacking skills. There's one where she says, "Spearfish your password, all your funds transferred."
It's amazing. I really encourage everyone to go read Zeke's story, because the story in and of itself is great, but some of those lyrics just add so much color, and they really are so wild. Bloomberg Zeke Fox, thank you so much. And of course, you can find his story on NI Big Take on the Bloomberg or on Bloomberg.com. Plus, you can hear more about crypto in general every Tuesday, 1 p.m. New York time, 6 p.m. in London. Matt and I host Bloomberg Crypto. That's it for Early Edition. More surveillance is ahead with Tom, John, and Lisa. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Fighting inflation and winning this battle is the single most important thing. Facing central banks.
We think we're looking at a mild recession starting sometime mid-2023.
We think there's a high risk of recession, particularly if the Fed goes really hard and fast.
Even if we have recession fears, the central banks are in a very, very tricky spot, right? Because inflation is way above target.
Right now, what is impacting the consumer are necessities, and that's shelter, that's food, and that's inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Closing out a messy first half from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down again by 1.2% on the S&P. TK, what an ugly 2Q.
Oh, well, ugly Q2 and ugly June 30. What I would really focus on, John, now is off of Francine Lacroix's panel yesterday. Euro breaks down. Madame Lagarde getting the focal point of a 104.29 euro. All you need to know is that's weakness back to June 15th.
And just about holding on to 104 as well. The conclusion from yesterday and a great panel from Francine, Tom, with Chairman Powell, President Lagarde and Governor Bailey. They want to take down inflation. That's the objective. And they hope that they don't take down growth too. But Tom, that's not the goal. The goal is to get inflation down. The hope is that we don't get negative growth. And I think the message was loud and clear yesterday.
Well, the growth is on a message into July. And John, you mentioned J.P. Morgan, July 15 or 16. What we're going to see maybe coming off of this Thursday, claims today and all that, is a recalibration by the sell side of where earnings are going to be. That dovetails into the econobabble.
And we need to talk about credit markets too. Bramo, let's work through it. Investment grade spreads, 150. High yield approaching 550. The junkiest of junk, triple C's, 1,000 basis points. It's getting just a little bit messier, isn't it?
Yeah, for the first time going back to mid-2020, it's getting messier, and the persistency of the messiness, I think, is really what's catching people's attention, because a lot of people are talking about the value in credit spreads, the value in credit if we're not going to see defaults. Right now, no one's talking about the value as much as the recession that was impending, and the fact that central bankers are willing to send the economy into recession to get inflation under control.
That's the difference this time around, and I think we need to talk about that. High yield spreads now close to 550, through the wides of December 2018, but we know what happened in December 2018. The Fed backed away. The Fed is not going to back away at these levels, or anytime soon in the minds of some people, Lisa.
Especially because these companies are not struggling. We're not seeing a credit crisis. No one is saying that there will be a credit crisis in the near term. The crisis is in inflation. The risk is that inflation becomes unmoored. That is what central bankers said yesterday. That is the message this week, and it's clear that markets are taking that message.
And Tom, to be clear, you basically got Chairman Powell yesterday validating what the market has been doing. I think that was the big standout for me. His words, markets have been pretty well aligned to where we are going.
Yeah, I think that's true. And I think that what he underscored yesterday is their extreme data dependency, and that comes with important economic data today. I mean, John, just go ECO here in the opening. You got PCE deflator, and critically, we're going to look at the savings rate, personal income, personal spending. How flat on their back is the American consumer? We'll know this morning.
Forgive us for the depressing open this morning. I spoke to Lisa for far too long, TK. About 5-10 minutes too long this morning, just kind of brought down.
Wait, hold on a second. Literally,
just a little bit.
Literally, everyone's talking about recession. We're talking about inflation. John's like, if you're feeling depressed, it's Lisa's fault.
It's Lisa's fault. It's always Bramo's fault.
Sure.
Come on, they know the rules, Bramo. Futures down 1.3% on the S&P. On the Nasdaq 100 this morning, we're down by about 1.6%. Equities getting dragged lower once again to close out 2Q, and a really ugly first half for the equity bulls. Yields coming in. This is where things start to get a little bit more interesting. Bonds behaving like bonds against the backdrop of pretty ugly growth, and Lisa, ugly markets too. Yields down by 3 basis points, just about 3.05% on a 10-year.
Yeah, and you can blame me for being somewhat down and beat in the terms of the assessment, but even the biggest market bulls are getting bearish at this point. And I point to Neil Dutta of Renaissance Macro, where he actually is seeing now a greater probability of recession, and Steve Chivarone of yesterday, when he was talking about being much more bearish on this market. A big part of that story is oil. And today, OPEC Plus is holding a meeting on output. I think it'll be 14 minutes, maybe 13 minutes. They'll probably rubber stamp some sort of increase, but perhaps we'll get some sense of what kind of supply input they can actually provide to offset demand, what that it might be coming online, and what the demand picture looks like for them, considering some of the concerns about recession. 8:30 a.m., Tom, this is what you were talking about, U.S. personal income, personal spending, all for the month of May, as well as U.S. initial jobless claims. I'm wondering whether we start to see jobless claims really tick up. Can we say we've seen the trough in jobless claims? Then, of course, there is this question of how much can consumers keep spending when they are eating into their savings rate, bringing those savings rate down to the lowest going back to 2008. And this is going to be interesting. And, John, this is what you're talking about, looking at each corporate story as a tea leaf in and of itself. Micron Technology is reporting earnings after the bell. How much do we get a sense of this particular risk, which is the chip shortage, how much potentially companies were hoarding chips during the pandemic and in the immediate aftermath, leading to a lack of demand now? How much do we get a sense of also how much the supply chain disruptions really are easing?
Did you see Restoration Hardware after the close yesterday?
Yeah.
TK, just to hear from these companies at the moment, you literally hear from them 1 month ago and they say one thing about how bad things might be. Then they come out a month later and tell you they're getting worse. That's kind of worrying right now, Tom, that things are moving that quickly.
You know, in the span of this week, we saw the markdown from Goldman Sachs and from many others on retail. But, you know, John, you reviewed Bed Bath & Beyond yesterday, which is basically a decade-old train wreck. And I guess we're going to see this from a lot of these. You wonder what the margin dynamic is, say, at Home Depot, radically different than Restoration Hardware.
Big story for the rest of this year. Hugo Rogers joins us now, Chief Investment Officer at Dowtech Bank and Trust. Hugo, let's start here. A few months ago, we caught up with David Stubbs of JP Morgan Private Bank, and he said bonds are back. Hugo, are bonds back?
Yes. I mean, in a selective fashion, we would say yes. We're less scared of duration now. We think that the interest rate increases that are being discounted by the market, that are already tabled into the Fed funds futures and so on, are, well, your preamble highlighted the risks now. The Fed is willing to flirt with, and other central banks are willing to flirt with recession, and the levels of tightening that are priced in are doing exactly that. We're seeing big declines. And in that case, if you're less afraid of duration, we've been underweight duration for our clients for the last couple of years, we can start being more constructive on the bond market. Now, the risk that the recession introduces is obviously credit risk, so you have to be very selective, but it does actually pay to be selective because there are high single-digit total returns, annual returns available if you're picking companies that are not going to go bankrupt in the next 2 years.
Hugo, where do we hide? If we're not in cash, if we need to be in the equity market, which sectors make the most sense?
Well, that's awfully tricky, Tom. So we've obviously been very overweight the energy sector for the last couple of years for our clients, and obviously that's worked very well. But in the last few weeks, we've actually been trimming that because the level of demand destruction that's actually coming through is accelerating. People talk about $120 oil, but it's $5 gas. It's, it's the crack spreads that sit on top of that really are adding to the price at which we find out where there's demand destruction. So even that space is, we've taken some profits, we still like it for the long term, but that's a place to be. The corollary, if you like, of the declining fear of duration means you can start looking at some defensive names, some utilities and maybe some staples in there too. Obviously, the dollar stores have been great, so that's another area that we're interested in. But there's not an awful lot of places to hide when equities still become, in times of stress, they become a cash machine. They remain liquid all the time. So all equities are problematic, if you like.
Well, they're problematic, but Hugo, one line of thought earlier in the year was that big tech companies would act in tandem with debt markets. They really traded with yields. Why is that broken down? When will that reassert itself if we start to see a rally in bonds?
As usual, an excellent question, Lisa, right on the money. We have been at pains to say that not all tech is created equal. There is a lot of tech with large cash on the balance sheet that generates a lot of free cash flow, that have very high barriers to entry. And we would suggest that some of those guys have bond-like qualities. Some of those guys will have some of that duration and defensive characteristic. But there's also a lot of tech, search, for example, some of the social media guys who are cyclical. They depend on consumer spending. And then there's the bit that we have hated for ages. We've been avoiding it completely, which is this cash burning category, where business models rely on burning cash in order to grow. Those are not sustainable business models. So, there I've just described three different components of large cap tech, and you need to treat each one differently in this period of the market.
What a tricky moment. Hugo, great to get your thoughts. Hugo Rogers there of Downside Bank and Trust. Thank you, sir. Lisa, I think you asked the number one question. If yields are falling on poor data, but not because the Fed is backing off, in fact, because the Fed is not backing off, they keep falling, particularly at the long end. How will that influence the relationship between bonds and equities, and which specific part of the equity market is going to benefit from that?
And the answer is I'm not sure. I mean, people have been bid up utilities, but some people would say that that's some of the more expensive. Those are some of the more expensive names in the market. So given a relative valuation, where do you hide, to Tom's question, especially given the devastation that we're seeing in certain retail names because of exactly the dynamic, excuse me, I'll get my words out, that you're seeing right now. It's a Thursday, and it's a depressing Thursday.
We're just 10 minutes in. The show's starting. You've got a few more hours to find your voice.
John, let's look at the drawdown.
Thanks.
Let's look at the drawdown on a June 30, halfway through the year. And I guess I'm going to call it a bear market. There's no question about it. But what I see there between Standard & Poor's 500, Dow Jones Industrial Average, and the NASDAQ 100 is the basic idea of quality and profitability. John, I wonder what that NDX number would be if you took out the cash flow share buyback monsters, those top 4 or 5 names. I'll bet you that number would be minus 40, minus 45%.
It's pretty ugly right now. We're down 1.7% on the NASDAQ 100, call it 1.6-ish. Yields in 3 basis points on a 10-year, 3.05.
Dow futures down 308.
I love you, Bramo. That's a bit delayed, but I love you.
Thanks.
Just a couple of minutes delayed, but the love is there. Futures are down. Good morning to you all. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. China's Xi Jinping has made his first trip outside the mainland in almost 900 days. She traveled to Hong Kong, calling the city reborn since he last visited 5 years ago. His comments were an apparent reference to the sweeping security law Beijing imposed back in 2020 that crushed dissent. Xi is marking the 25th anniversary of Chinese rule in the former British colony. Vladimir Putin reacted to NATO's decision to admit Finland and Sweden by saying they're welcome to join. The Russian president said that NATO, including the Nordic nations, is totally different compared to potentially allowing Ukraine to join. Putin also said that if NATO places military personnel and infrastructure in Finland and Sweden, Russia will have to respond. Congresswoman Liz Cheney has warned her fellow Republicans that they must choose between former President Trump or the Constitution. She says they cannot be loyal to both. In a speech in California, Cheney called the former president a domestic threat the country has never faced before. Cheney is vice chair of the committee that is investigating the attack on the Capitol. Senate Democrats are working on shrinking the tax increases in President Biden's economic package. Bloomberg's learned it's part of a bid to cut a deal with Senator Joe Manchin and get the legislation passed. The changes could mean that both U.S. corporations and wealthy households end up facing smaller tax hikes. Suspected North Korean hackers are believed to be behind the recent $100 million heist on California blockchain Harmony. That's according to blockchain forensics company Elliptic Enterprises. Elliptic says the hackers, known as the Lazarus Group, targeted username and password credentials of Harmony workers in the Asia Pacific to break into the platform. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The Boston Pops Fireworks Spectacular is back in Boston, and Bloomberg will make sure you don't miss a second of the fireworks. Music and special appearances by superstar Shaka Khan, Grammy and Tony winner Heather Headley, and The Voice winner Javier Colon, plus Middlesex Fifes and Drums and the Tanglewood Festival Chorus. It all starts July 4th at 8 p.m. Eastern, right here on Bloomberg Television and Radio.
Is there a risk that we would go too far? Certainly there's a risk. But I wouldn't agree that it's the biggest risk to the economy. I think that, the bigger mistake to make, let's put it that way, would be to fail to restore price stability.
If the objective isn't clear now, you have not been listening. That was Chairman Powell of the Federal Reserve sitting down with Francine Lacqua yesterday afternoon. From New York City this morning, good morning. Futures positive 1.3% on the S&P. On the NASDAQ 100, we're down by 1.6%, down across the board here. Yields down too by 3 basis points to 3.0537%. Bit of news earlier this morning. Here it is, Tom. Russia confirming it withdrew troops from a strategically important island in the Black Sea. We're informed by them the decision was a gesture aimed at facilitating grain exports from Ukraine. Now, Tom, on the surface, that sounds like good news, but of course we want to see real follow-through and real positive outcomes off the back of it.
Terrific brief by Julie Norman of UCL yesterday on this, folks. This is out of Odessa over to the west towards Moldova and Romania, on down through the Bosphorus, on down through the Mediterranean, and maybe to feed Tunisia and Egypt, particularly Egypt as an example. John, I know our Eric Martin with IMF coverage is really focused on Egypt there. We're focused on the President of the United States. He will speak in Madrid today. Maria Tadeo in Madrid with Anne-Marie Horton. Anne-Marie, let me begin with you today. What will you listen for from President Biden?
Well, Tom, the president's going to want to come out and make sure he talks about this historic win and how he was backing it from the beginning. Remember, just over a month ago, we were in the Rose Garden with him, and he had the leaders of Finland and Sweden, and he's been working, of course, behind the scenes to make sure that they had a clear path to join NATO. At the same time, though, this press conference, I imagine, is going to be overshadowed on what is going back at home. Yeah. You guys started the show. You're talking about what Jay Powell said yesterday in Sintra. It is about inflation, and there's a fresh poll out for the president that many think that he is not handling the economy very well and that the state of affairs is not good in America, including 8 in 10 Democrats. That is what got my attention this morning.
Maria, what I found extraordinary was the immediacy of the war from Christine Lagarde yesterday at Ms. Lacroix's panel. I was really taken aback by how, for Americans, it's distant, and for Christine Lagarde, it is decidedly not as well. What do the leaders want out of the 2 sets of meetings you've covered in the last week?
Well, what they wanted, which was that real commitment from NATO to deploy troops in Eastern Europe. They have already, when you look at the language that came out from that statement yesterday that sets the agenda for NATO for the next 10 years, they got the clarity, particularly the Baltics, that they wanted. Russia is not a friend. Russia is not a working partner. It is a country that can be very dangerous in the future for them. I think when it comes to the economy, Tom, you're also very right. For the Europeans, this feels personal. It's about the trade that now has been incredibly disrupted. It is about the grain. Today, Russia says we're going to move away from it, pull back as a gesture of goodwill. But remember, the last time the Russians said this, they moved away from the capital of Kyiv because it was incredibly well protected by the Ukrainians. It was a defeat. And when it comes to inflation, that's another big talker here in Europe. You've seen it. Spanish inflation is 10%, incredibly difficult to stomach. So for the Europeans, it's very difficult to separate the security from the politics and now the economy.
So when you talk about the actual resolutions coming out of NATO and this summit, Anne-Marie, did they kind of, I don't know, jump the gun with respect to Turkey and its allowance of Finland and Sweden to come into NATO? Or is there some other policy resolution that's going to come out that perhaps will be an even bigger headline?
No, this is the headline. This is the key takeaway. We already had Mario Draghi of Italy leave because he had to go home to Rome to discuss some energy issues because, as Maria says, inflation, energy bills, grocery bills, these are the main concerns. So the issue these leaders have is to make sure they can maintain this unity while dealing with these domestic problems that have been exacerbated by what we are seeing in Ukraine. But it's a great question, Lisa, because they pretty much jumped the gun of the summit because that headline came out right at the start. And that is what this meeting was all about, to make sure there was that trilateral dialogue and an understanding between Finland, Sweden, and Turkey that these two Nordic countries could join NATO. And we should say President Putin, on his trip now outside Russia for the first time since the war began, is talking about that. And he said that's their decision to join. But if they're going to have armies or military capabilities in these two countries, that is a different circumstance. And obviously, he's quite concerned about Kaliningrad, which is on the Baltic Sea. But this is the main headline. Would you just note, though, all of these countries have to go home to their own parliament and get a sign-off on this. So it's not a done deal, but the path is there.
Well, but Maria, to that exact point, they have to go home. And the issue at home is so much more serious right now than it has been for a very long time in terms of some of the challenges there. Is NATO more or less of a priority, given, yes, the threat of Russia, yes, perhaps the strategic challenge of China, but also the strategic challenge of just what's going on at home for each of these leaders?
Yeah, and you know, to be fair, if you go back in time 3 years ago, NATO was described by the French president as brain dead. It didn't have a vision, it lacked a vision, and there was no clear purpose. President Trump also at times was very ambiguous about whether or not he would come to the rescue to their allies if they were attacked. That is the key principle of NATO. And yesterday, all of those doubts were dissipated. But to me, you actually struck the main point here. Yesterday, Mario Draghi was on the phone. He was not paying attention to NATO because it has a big issue back home because of energy, political crisis. Emmanuel Macron, I was struck. This is the first time I haven't seen or heard anything from the French president. Usually he likes to take center stage. That was not the case during NATO. When it comes to Olaf Scholz, I have not heard a word from the German president. So a lot of this was about Turkey. That was done, as Anne-Marie says. And then, of course, America saying we will deploy more troops and provide help for the Baltic. So all of that is done. For the Europeans, it does feel like this is a done affair, and now they worry about the economy.
I've got so much time for that subtle dig at Macron there, Tom. That was beautiful work.
That was gorgeous.
That was just beautiful. I understand there's going to be a town hall later at Joyslava, Tom, about 2 a.m.
Yeah, tonight
in Madrid.
It's going to be there. And, of course, Maria getting ready for that Real Madrid-PSG game that will be in Paris later this year.
Very cool.
Team coverage.
Maria Tadeo alongside Anne-Marie.
John.
Richard Haas out on Twitter, Tom.
Yeah, I saw that.
Want to talk about that?
Yes.
The President of the Council on Foreign Relations saying the following: 30 years after the end of the Cold War, Vladimir Putin has done for NATO what it was having trouble doing for itself, coming up with a mission that justified its continued role and claim on resources.
I may make it my book of the summer for the third summer in a row or something. Richard Haas, The World, John, is Western Civ 101. And what we're living now is not in his book. It has all changed, isn't it?
TK, you and I are very good friends. Have been for a long, long time. I swear, how many books of the year in the summer do you have?
No, well, the summer can be rich, you know.
How long is the summer?
It can be rich. There's a book of the year, Angela's Step.
And that's the book of the year. And when does the book of the summer come out?
January 15th, January.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a